वो नहीं आ रहे तो एक कम हो गया hello, good afternoon, and वो नहीं आ रहे तो एक कम हो गया yeah. And hello, everyone. Can you come forward and sit in the front chairs? And thank you, CT and India Blockchain Forum. I think person are joining soon. So I will just brief what is Linux Foundation Decentralized Trust India chapter, and then what is the agenda for today, and all this effort putting by all the teams in couple of months. Uh, I think we all know the Hyperledger from long time, but this LFD Decentralized Trust, which is also recently become 1 year old, is a more branding than just Hyperledger technologies. It is now having even let's say decentralized computing, cryptography, or decentralized identity, or any of the technology which is bringing the decentralized trust in the ecosystem. So I lead Hyperledger India, which is a LFDT India chapter now, and I have my full team. We have Garima, we have Ankita, there is a Vikram. So I will show that the team as well. So and Linux Foundation is part of Linux Foundation Trust, and there's a completely open source, open development, and open governance. And not just the code open, but I think everything governance or even talk about the development, everything is an open environment. Anybody can join, anybody can contribute. And it's almost 9 years. So it all started in 2015, code contribution from IBM, Intel, and DTC, and couple of big giants. And now it's more than, there are 11 projects, 50 Hyperledger Lab, there are 200K subscribers, and there are 186 meetup groups. And there are 7 regional chapters. So like one is India chapter, there are another regional chapters like Brazil, like the European chapter, there is a Arab chapter. So like this chapter is being run by the community. And it all mission started blockchain beyond crypto. So it started with telecom, supply chain, all kind of use cases where the technology could implement it to solve the bigger enterprise problems. And so currently is a 19 projects, 1.2 million contribution. There are 400K total commit so far in the different projects, and all these big companies is a LFBT members. We can find couple of Indian companies as well, couple of financial, let's say Mastercard here. Even CT was also member, but is currently not. And these are all the associate members, which are some of the central banks, some of the universities, some of the, let's say DigiYatra is here, one of the company, non-profit company in India who driving the DigiYatra platform. We have NPCI, which is one of the Section 8 company, even building the CBDC and other financial projects. And there are many global companies so far. And this is journey of the Hyperledger technologies, starting from Fabric to now we have a multiple projects. This Credible is a very interesting project which is recently contributed by one of the Indian or one of the Pune-based startup. So it's a open source project for building the decentralized identity solution, and it's journey from Hyperledger Fabric to Besu, Indy, and couple of interoperability tools, and then now this Lockness or Hero, which is the first open source public blockchain code. And couple of slides about the India chapter. So we have more than 25,000 members out there, and I think not just the members, but if you see the right side, there are a number of contributions from the India chapter perspective. So there are almost 20 plus mentors or mentees joining the LFDT projects as a contributing code or working on some problems out there. And I think not just mentees, but a couple of what you call mentors also joining. Even I've been also part of mentorship program. So it's a good opportunity for educations and the academia or anyone who want to contribute to open source code. And we keep happening our different events every year in different places. So this couple of pictures from the event from last year in India Blockchain Week in Bangalore. These are the Indian companies who is a member of LFDT. So TCS is there, Wipro is there, Ironworks, which is Pune based, Dive is there, Tripsy, NPCI, DigiYatra, even recently this STPI, which is a blockchain technology COE by Government of India, who incubate the blockchain startups. And this is our team. Ankita work in Ironworks, Vikram work in SCL Tech, and we have a couple of different who supporting the education or education initiatives or government initiatives. We have a couple of who manage the events and engagements across the team. So, so there is a separate society for India Student Society. So there are which led by Anushaya, where we are setting up different innovation labs across the universities, across the colleges. Couple of in Pune as well, in MIT ADT and PCCOE as well. So anybody can start this academic society in their respective colleges. And every year we also release this LFDT India ebook. In this ebook, I think you can download and you can get an idea like what we are presenting. So it covers all the members or kind of use cases, what is being built in India on the LFDT technologies. So every year we release, last year we released called a Hyperledger ebook, this time LFDT ebook because we rebranded the Hyperledger to LFDT. So today we having this LFDT Innovate and this CT India Blockchain Forum and LFDT India Chapter Hackathon, which put together by CT India Blockchain Forum, LFDT, Yogesh, Prasanna, and Anand, Suvarna, and everyone out here. So today I just brief the agenda and then we will invite our first guest, Ashish Singhal, as a keynote to talk about what he's doing in IBDIC, which is the Indian Bank Digital Infrastructure Company. So, so Padmaja is not joining because he has a Gujarat CM meeting today. So she is not coming. So actually Padmaja is leading the national blockchain framework in India. So the government of India building the national level blockchain infrastructure. So she is leading from in person. Then we have Namita also from City talking about what City doing in blockchain. And then we have a couple of panel discussions, one in AI and blockchain, which moderated by Suvarna, where we have Ravikant from Billions Network, which is a part of Polygon, then Nikhil, CTO Resumax, and Sudhin, Alok Gupta. And then this I covered. So Prasanna is also is coming bit late. Or is it stuck? Okay. Lights are moving here, is not moving here. So anyway, so then we have a couple of okay, is now coming. No, now it's coming. Yeah. So we have Prasanna, he's joining. So he's talking about what is happening in the Indian blockchain ecosystem. Lights, I think, is coming late. And then there is a one panel on future of finance where with the tokenization and other thing, and where which will moderated by the Dipankar Roy, which is the NIBM. NIBM is the RBI Institute in Pune. And we have three different leaders. One is Vedant from Vayana. Vayana doing lots of work in especially in trade finance and emerging technologies. We have Neeraj Singh from Zolt. So Zolt recently got RBI approval for the supply chain financing kind of product, which is closely working with IBDIs and other thing. Then we have Devendra from the one company in Pune. I think it's disconnected from Zoom as well. Julian, can you hear us or not?
I can hear you clearly. Looking good.
Oh. Okay, but it's showing some connecting Zoom spaces here. Anyway. Yeah. Okay, yeah. So anyway, I think so. Thank you all and welcoming everyone to this event. And I now welcome Ashish Singhal to give first talk about what they are doing with IBDIC. Thanks. We need to connect this one. Okay. Thanks.
No, that's okay. Yeah, sure. Thanks. Hi. Good afternoon, everyone, and it's a pleasure to be here. Thanks, Citibank. Thanks, Kamlesh and the Linux Decentralized Foundation. So I think when Citi started this entire piece and Prasanna and Kamlesh spoke, this entire piece that blockchain as a technology has been on the anvil, just waiting to cut loose for last 5, 7, 10 years, etc. And still we are waiting there. Why? And blockchain is not only about crypto. There's a lot more which can be done there, and particularly on the digital infrastructure side, just to take you through a couple of use cases which we have done, etc. It's important to understand that this entire digital public infrastructure, and I was discussing with Swarna and Namita during the lunch piece, that building at scale in India itself is a very, very credible piece. Okay, so do you have a... Okay. And since it's a small room, can I do away with this?
Yeah, I think.
Sorry. Okay, I'll do that. Yeah, so in terms of, if you were to look at the digital public infrastructure journey for India, it started with, somewhere in 2008-9 when UIDAI was formed, while none of us knew that it will take this kind of shape. And then came in the JAM Trinity, which was the base layer, right? And if you look at it after that, we've actually built digital infrastructure, whether it was UPI to start with, then came ONDC, then came DigiLocker, especially during COVID and the COVID app, etc. And then came one of my favorites, in which Kamlesh referred to while he was presenting the Digi Yatra. I think it takes the digital public infrastructure into a completely different space. So it takes digital public infrastructure into a completely different space. And if you look at it, hindsight is always 2020, and it looks very logical what they went and built on blockchain. So they did the verified credentials which reside on the smartphone of or the app, etc. And then every time you do a transaction, there's a validation over blockchain which happens. So quite a significant piece on digital infrastructure. Obviously, the challenge which still needs to be surpassed is in terms, and I'm sure it'll happen more sooner than later, is how do you scale something on blockchain for a mass market like India, right? So that's an important piece. And if you were to look at next slide, we can go probably. Yeah. So clearly, and I will still hazard a guess here, I may be proven wrong, but that's the risk you need to take as tech innovators, that is it the next frontier? And at least it has all the credentials of being the next frontier. Whether we are able to use it, deploy it economically for scale with enough innovation is something which depends on all of us. And when Kamlesh mentioned that there's a hackathon which has been sponsored specifically for blockchain by a Citi, I couldn't have been more happier, right? Because that's a good step to encourage developers and the community to say, okay, develop. Because I remember about 2 years back, I had attended one India Blockchain Week in Bangalore. That was the first time I was attending it. And when I was traveling there, I was very enthusiastic that there'll be full week dedicated to blockchain, etc. There'll be a lot of things which will happen. And when we went there, I saw a lot of young kids, and I'm saying young kids because obviously I have a lot of white hair, and they were would be 23, 24, 28, anybody rarely above 32, 35. And all of them were saying we will change the world, which is great. But everybody was talking about either crypto or gaming. None of the other products. And some of those youngsters, nothing wrong with that when you are young, had complete disdain about regulation and the governance aspects, right? And just imagine as a career banker, you will say, boss, ये कभी चलने वाला नहीं है, ये लोग पागल हो गए हैं, right? Those were the thoughts. And this was also the time when CBDC had just started there. So I kept saying, go back to RBI, whatever you guys are doing with crypto as an underlying layer, please go until you can do this with CBDC layer. You'll get enough and more support. But it probably still, it's in the nascent stage, and some initiative like this by city should hopefully help take it more from an institutional perspective there. I won't bore you with all this core value proposition, etc. I'm sure this community knows. But in terms of banking, there are multiple use cases, and I've just listed a few of them. And the reason I'm listing few of them, because two of them we are one we've already launched, the other one we are in the process of launching, so that will help. But again, take it to the path that we are still testing waters here. It's nothing has scaled up yet. These are all efforts of last year and a half on the annual. And I think one of the challenges from a banking perspective, which can be solved using this technology, is this entire piece on identity management and KYC. All right. And I would encourage, I don't know if some of you have experimented that as part of this hackathon, but if you've not, I would encourage you guys as developer community to go apply in RBI Sandbox. Right now, Sandbox is available on tap. It's open theme throughout, because clearly an immutable identity which can be created on blockchain for such a large mass of the segment can change at least not only, in fact, banking and financial services, but all aspects of life where identity is required to be produced. And today, technology supports it. Somebody has to just build it and scale it up there. So that will be one piece which I'll leave you guys through this. Now coming to what we are doing in terms of blockchain and digital infrastructure. Just a quick piece. I don't know how many of you know us, but we are a banking consortium created by 18 banks, about 2 years old. And the entire idea is to build digital public infrastructure in the non-payments space, because payments any which way, NPCI is doing a great job. All right. And what we do essentially is, the idea is, because it's a digital public infrastructure, can we create collaborative data solutions? Can we create shared infrastructure on which everybody else can then go and innovate? Pretty much like what NPCI did for payments in the other areas of banking, can we do? And our focus areas, because banking is huge, focus areas at this point in time are trade finance, and we are going to talk about that. The other big piece for India to be Viksit Bharat is this entire piece on MSME financial inclusion. And actually, MSME financial inclusion has remained a goal for India for times, as much as I remember, for last 15 years, 20 years, every time we talk about that. And every time, invariably, we end up blaming the banks for not having the courage to go and take a risk on a micro or small enterprise, and forget the fact that those guys don't have basic documents on which banks can do responsible lending. And when I'm using the term bank, I'm talking about all financial institutions, including fintechs, etc. Some of them may have realized it by now. Some of them will realize that time goes by, that lending is all about getting that money back, right? And as I keep saying, that in a typical personal loan journey, forget the accounting books, but genuinely the bank makes money only when the last 2 or 3 installments come back. So if there's in a 3 or 4 year loan tenor, if there's default anywhere else, bank ends up losing money on a particular loan. right? Hence, it is important to get that money back and the loan to run its full tenor. Right. In terms of blockchain, one piece which we have just exited from an RBI sandbox successfully, and Neeraj is here who will talk more about it as he goes along, that we are doing. So essentially, this is the first use case, and we actually went in RBI sandbox there. First use case in India, which is regulatory backed and on asset financing. And that too, the assets which got financed were linked to the invoices. So just to give you an example and a brief, that in a typical supply chain, you have an anchor, let's say Tata Motors as an example, since we are in the city of Pune. And then you have a tier one vendor who supplies to Tata Motors. Typically, the tier one vendor in an automobile situation would add about 35, 30, max 40% would be the value addition. So which means that if he is supplying a 100 rupee invoice to Tata Motors, 60 rupees he will be buying from various people. Those are our tier two vendors. And similarly, at every stage, there'll be about 20, 25% value addition. So there'll be at least 4 or 5 layers there. Now, tier one vendor has no problem in getting finance today, because banks are okay to take risk on Tata Motors. They know that if they've accepted the invoice, the payment will happen at the end of 90 days or whatever, right? But tier two vendors, some of them have reached credibility because of the scale, etc. But a lot of them still have not reached credibility. As a result, they don't get funding on their own. And if the tier one is not a rated anchor, etc., they would also not get funding basis the tier one, or they'll get it at a very high rate. So in this piece, essentially, the tier one vendor gets the entire financing, and he uses it because he's least interested in developing the supply chain. So what we did here as part of this is we said banks have to lend and to the tier 3, tier 4, tier 5 guys. Banks are comfortable taking a risk on Tata Motors in our example. So how do we percolate that credit worthiness of Tata Motors down the chain so that banks are comfortable lending to a tier 3, tier 4 guy, right? And that's when we said, if Tata Motors was to issue tokens and they can be funded by the banks, with the view that since these tokens are backed by Tata Motors, when Tata Motor makes the payment, bank's loan will get repaid. And that's the system which we created, essentially to carry forward the credibility of a large credit rated anchor and helping the banks to lend to a guy who's not directly supplying to Tata Motors or any other credit rated anchor. Okay. And again, like I said, once you do things, everything looks very, very simple, right? Essentially, what we did here is when tier one supplies to the anchor, once the anchor accepts the invoice, we tokenize that, and those tokens automatically flow to tier one. When that, and this is at an invoice level, and they also get fractionalized. So 100 rupee invoice, 100 tokens get to tier one. If they owe X amount, let's say 20 rupees to tier two, they can pass the tokens and say, I've given you tokens. Now you'll get the payment. With these tokens, the tier two, tier three, whoever is the owner of the token or holder of the token, they go to a lender. Lender knows that these are tokens which have been issued against this particular invoice, which has been accepted by Tata Motors for a due date of XYZ, this thing, and hence they are comfortable lending till that due date. And that's where the asset financing leg comes in. So this is actually a hybrid product which we created, where the first leg between anchor and tier one is still supply chain finance. After that, from a regulatory perspective, everything is asset financing, and asset being the invoice tokens which got created, right? That's the piece which we did. And I'll tell you, again, from a city of Pune, when we were doing this pilot in the RBI sandbox, I can't name it, but there was this tier two vendor I met of a large automobile manufacturer in Pune. And typically, at least till that, before I met this tier two guy, I would have assumed because that Anchor was such a large automobile manufacturer that tier 2 would also be a decent size vendor. And when we met them, he was supplying about 12,000 to 15,000 a day material to tier 1 vendor. So give or take 2.5, 3 lakh turnover a month, which is 30 lakh, 36 lakhs turnover a year. Not bad from a lending perspective, right? And that guy had no bureau footprint either in the personal capacity or in the business capacity. So just imagine, the banks would obviously not feel comfortable lending NTB, self-employed, small type with a 30 lakh turnover. And he was struggling to get a loan of 7 lakh rupees to buy a machine, which is capex, not even opex. All right. And when I looked at it and we explained him this entire piece, and today what was his piece? He would go to the tier 1 guy and say, make advance payment, this, that, etc. Some parts tier 1 guy will make, but even if he's making what we typically call dynamic discounting, but in a very raw form, it happens at that level, the interest rates would be very, very high. So he was extremely happy. He said, I'm very happy if this happens. And tier 1 guy was happy because rather than locking his money, and in case of any default, he'll not be carrying the can. It is the bank who's taking the exposure there, right? So those are the genuine profile of guys to whom we can actually bring them in the financial inclusion loop when we do this piece, right? And there's, from a credit perspective, there's absolutely no risk here, unless and until the large credit rating anchor, which is AA, AAA, defaults on the payments. And if that is the case, that's a normal banking risk which all of us as bankers will end up taking, right? So that's how this entire piece works. That was one piece. Again, it's a blockchain based asset token, classical asset tokenization, nothing else but a different use case for that, right? And the good piece is that because it is invoice based token, at the end of the day, from a banking perspective, is still unsecured. And just imagine if RBI has given us permission and we approved it right from an unsecured piece. Those of you who are wanting to work on secured asset tokenization, whether it will be property, gold, bonds, anything else, that can now open up there, right? So that's a huge piece which is happening. That's on deep tier financing. Again, the other piece which we are working on, because blockchain is not only about those lines of code, etc. It's more about collaboration, because it acts as a trust provider to the unrelated network. So what we are building and we are launching on 9th of October in GFF is a trade platform based on blockchain. Here, trade, again, the rules, the regulations of trade by ICC, UCP 600, etc., they have been cast in stone for donkey's years, but very little disruption has happened in that entire area. So our piece was that trade, why should we look at trade only as happening between buyer, seller, buyer's bank, seller's bank? That's one piece. But if the entire trade has to get digitized and become paperless, presence-less, it is equally important to bring the entire network onto the same platform. Just to tell you, in India, for a cross-border trade, there are some 36 set of documents for single trade. It could be up to 36 set of documents which are required, and all of them exist, a large part of them exist only in the manual form today. And all of us know that the moment anything paper comes in, then maker checker comes in from a banking perspective, errors come in, discrepancies come in, and the entire cycle gets too elongated. Right. So we said, what happens if we were to have an infrastructure, while we are a trusted entity, given the fact that we are owned by 18 banks, but still if we get the infrastructure or the technology to provide trust rather than an enterprise providing trust, and get everybody on the same platform and enable seamless exchange of data, information, documents authenticated right from the source, right? And that's what we are doing at this point in time. While I'm saying that we will launch it on 9th of October, the full-fledged with all bells and whistles, all functionalities, features, it'll take still 1.5 years for it to get fully operationalized and launched. But then the entire idea is also that philosophy of fail fast. So whatever we have said and done, deploy it, keep learning, keep evolving, because adoption itself will be a large cycle for this. Right. And hence, the entire ecosystem player, whether it's an insurance company, whether it is customs, whether it is DGFT, RBI from a IDPMS, EDPMS system perspective, or everything where logistics players, customs and forwarding agents, everybody, the entire vision comes on this unified platform. And that's one piece. And all this will be API driven. So tomorrow, specific niche customer segments, specific niche trade corridors, if anybody wants to innovate, at least the underlying base layer will be available. So view it like UPI, and then you could have GPays of the world, phone pays of the world go innovate, or payment aggregators go innovate whatever you want to do. And here's the digital infrastructure layer available from the IBDIC, along with, and we've also recently got blessings of DGFT for this in the form of BTN, and that entire layer is what will get developed. So quite massive, quite big, quite transformational, but it's a long journey ahead on this. And if any one of you wants to join this piece and help support develop this infrastructure for the nation and the globe, more than happy to partner. Yeah. So these are the two use cases which we are doing. And I think overall the time for all of you who are developers and tech geeks, it's a golden opportunity, because Indian government, Indian regulators are not waiting and watching. They are happy to support. It's a question of you going and presenting a credible use case, and then developing it, keeping in mind both in word, letter, as well as spirit, what the intention of RBI is. And from a banking perspective, I can tell you, cute is not beautiful in RBI sense, right? So do things properly in the right way, and they will support you immensely there. So that's one big piece. Sandboxes, like I said, you have a SEBI sandbox, you have a IFSCA sandbox. So make use of that to test out whatever you have in mind. Yeah. And like Swarna was mentioning that within city, they say if there's something which you've tested and scaled in India, you can scale globally. That's precisely the case. The kind of population, size, and complexity which we have, if you can solve there, everything else will be a cakewalk. So don't bother if the banks negotiate with you hard and you don't make money, because you are learning and scaling up your products, and then you can make money when you deploy them elsewhere and earn in whatever currency you guys want to earn in. So that's an important piece. So great opportunity for all of you. Just focus on building the right pieces with right design architecture, and I think you guys will be able to do an immensely great job. Yeah. In terms of the outlook, etc., I mean, given the vantage point where I see from, there's a whole lot of opportunity still, while few people might say, is blockchain and also ran, etc. My sense is there's still a lot to be done. And the triangulation of blockchain with the AI and IoT can actually lead us to a very, very different world. All right. It's, everybody is talking about embedded financing at this point in time. But my sense is more than embedded banking, should be inclusive banking by using these technologies, where as individuals and as entities, we normally continue to work whatever we are doing, and banking should happen automatically there. Right. So that will be the big message for all of you. And clearly, there are a lot of problems which to be solved for the nation for us to be a $10 trillion economy. And we have young talent, bright talent, and the risk-taking ability at this point in time is fairly high. Just go and make it happen there. Yeah. And in the end, I'll just leave it with you. Banking is all about trust, and create that trust through infrastructure. Go build boldly, build responsibly. Then first build for Bharat, and then take it to the globe. Yeah, that's all. Thank you so much, guys.
Thank you so much, Ashish, for such a delightful session. For the next session, now we'll invite Namita Saran, and she will talk about city's perspective on blockchain.
Thanks, Yogesh, and thanks, Ashish, for such a great session. First of all, I would say a big thank you for everyone to take out time and come for this session, as well as this community being formed here with partnership of city and the broader blockchain community. It's really very, very important overall, I think, for city as well as for India. Like for city, as I talk about, we have global forums across different locations for blockchain where city is actively innovating. And majority of the groups here at city who are actually delivering with the blockchain technology are based out of India, and specifically Pune. So it was a very big dream for us to form this community. There's a lot of hard work of the group here which has gone in to get through this community and the compliance and other requirements which was there. But I'm really happy to see this coming together. And as Ashish was mentioning, I think it's important that this community collaborates and takes this to the next level. It's not just for us to learn and contribute, but I think for India as we grow, I think it's a great, great opportunity, even with youngsters and new generation coming in and contributing to this. And it brings a lot of value with innovation and things which comes in. Now, starting with city's journey around it, right? So as we all know, like it is 10 plus years since this technology is there. Everybody is trying to innovate. Earlier, it was more like a proprietary, everybody trying to do things of their own and thinking that they can run or be the leader in this than collaborating. But the way the whole technology has evolved and brought more collaborators together, I think no longer it is a proprietary anymore, but rather it's more about coming together and seeing how it works, right? And the whole framework and infrastructure with Ashish team working in, I think a lot of things moving in more in a collaboration perspective. Now, as we speak for city, this journey started a couple of years ago. The first successful pilot that was done for city was the city token services in September 2023. And we launched with the smart contracts there where we had a ship to pass through the Panama Canal. And that's where this whole tokenized service as a use case was piloted. And the great engineers from here, including Yogesh and a couple of others, were part of it where we could get that through. So that was a proud moment for all of us where we could get the first successful pilot out for city. From there on, I think the ambition became extremely, extremely huge because this was something which we presented as the overall services technology. As I talk about services technology or the treasury services, it's known as the crown jewel for city. So this was presented in the CyBoss in 2023. It was a big thing for the team. They really rushed through to make sure this puts in as a launch for city in 2023 CyBoss. As we progress with the journey, everybody wanted to get more and more from this. And that's where the use case came in, where we looked at how do we use this tokenized service to transfer money real time, 24/7 across the city branches. So the first commercial use case for city went live somewhere around October 2024, where we were able to get this tokenized service into action across US, UK, and Singapore branches, given that was the most economically valuable contract for city to move across. And while we were looking at this use case, it was never easy to kind of move things through because there's a lot of innovation which needs to come through. But being a bank, like we have like 19,000 clients. 85% of those clients are all Fortune 500 clients. We operate in 90 plus countries. So achieving this was really difficult with emerging technology, plus you still had to depend on your traditional guardrails. So anything which was to do with AML, sanctions, how we are looking at the KYC, all of that was something which we reuse from our traditional rails. While with this emerging technology, we made sure that we are able to get to the 24/7 real time, even looking at liquidity in a real time, how we could make it happen. Now, as we move on, this year, May 2025, Citi got the American Bankers Innovator Award as well for this thing which came in as the innovation. And the journey continues as we go ahead with the recent Genius Act, which has been passed in US. There are a couple of use cases with stable coins that has spinned across, and there are various, I would say, the various POCs which are happening at this moment. But again, being a bank, it comes with a lot of responsibility because as we are serving such a huge client base, it's very, very important to focus on the safety and soundness of it. So you can't just go at a fast pace and really make things happen and be the innovator on the kid on the block who can really make things happen. But it's more about making sure whatever you are doing, it's with complete safety and soundness and building that trust with your customers. So those use cases, and if you will see across any of the cities, interviews right now, either with Shamir Khalik, who is the head of services business, Jane Fraser, who is the CEO of Citi, Ryan Ruggs, who manages the Citi token services and overall digital assets for Citi. Everyone is focusing on how do we actually make sure that we are front runner in this, partnering with various organizations and our clients as well to see how we could co-create and make things happen. But it's a very, very interesting journey ahead, I would say. A lot of things to prove, both in terms of technology as well as bringing our legacy infrastructure to the level where we would want to. So it's more going hand in hand and making sure we are really taking the industry to the next level. And I think with India stepping in and getting things through, I think with this community, I'm really looking forward to as to how we could learn from things, same way with Citi already going ahead in the US and other markets where it's more regulated and the regulatory support is there with stable coins, etc. I think there's a lot of to learn and engage and figure out across the globe and see how this community can collaborate and make things happen. So with that, I would say all the very best to this community. We should continue to innovate. The call to action which Ashish has put in that this community should do more and more. and lot of opportunities available for us to collaborate and innovate and use the sandboxes to do more. So let's continue this community, share more, and definitely I think we'll meet more often to see how this community can contribute more to the India as well as overall across different organizations. Thank you.
I'll request now Kamlesh to present a memento to our esteemed speaker. Thank you so much, Namita.
For the next panel, we have Suvarna, VP City. Hello. Then Ravikant, Director Growth, Billion Network. Then we have Nikhil, CTO Resumex. We have Dr. Sudhin Baroka, founders AI on Tally Technologies, and we have Alok Gupta, founders Chain Code Consulting. I welcome all of you. Please come on stage. Okay. Hello.
Thank you all. So good afternoon all. Welcome to our first panel discussion of the day of current state of AI, blockchain adoption in enterprises. So I can see a very enthusiastic crowd over here. I see college students. I see very expertise in the industry. So welcome all. And with this, we introduce to our panelists today. So please welcome our mentor, Nikhil Vaivekar. He is a CTO at Resumex, a unique platform for works and employers that leverage both generative AI as well as blockchain over the smart contract, how we can play the economy of for gig works. Second, I'll welcome Alok Gupta, the Chain Code Consulting company created NFT Trace, a blockchain and AI-powered blockchain solution aimed at bringing transparency in an agricultural supply chain. This farm to fork initiative aimed to build a more transparent and trustworthy food system. We also have honored Dr. Sudhin. He is a global IT and innovation advisor who has held key roles as a CIO or a chief innovation officer at major companies like SBI, Barclays, IBM, and GE. He's also AI researcher, and I'm amazed as an architect. He has worked on more than 17 technology, if I'm wrong, right? So, Sudhin, welcome on a board. We have, please, another a great expertise, Ravikant Agarwal, the director of Growth Billions, which is a spin-off of Polygon. He is a practitioner of AI and Web3 who has built and scaled digital ecosystem, led AI identity solutions, and co-founded the blockchain startup. I like the idea what he said, that in a 2040, 7 to 8 AI agents will be with every human. Am I right? So that's the vision. We have a very, I would say, the blockchain enthusiast and AI enthusiast people around. And with this, we'll start the panel discussion, and I'll ask each and everyone the first question, that how do you see AI and blockchain will go hand in hand together? So what do you?
Yeah. Hello, everyone. So, AI and blockchain are both emerging technologies, but very different, right? And complementary, I must say. So, AI will automate processes, right? Blockchain is providing infrastructure, right? So, both are complementary in the sense like AI is making things faster, but AI is very dangerous as well, right? We need to make it controlled. So blockchain can provide this infrastructure, first of all. We can control what kind of data can be accessed through blockchain without breaching the limits, and how to set these limits. You can do this through smart contracts. And you require a lot of GPUs, a lot of processing power. Blockchain can definitely provide that distributed computing, right? And on the other hand, AI can automate smart contract simulation. AI can actually trigger the smart contract as and when required. So these two things make it a deadly combination. And main focus should be on solving problems. It's not the technology that we require. It is the compelling use cases that we require, solving the actual problem. I'll just give one example. So in chain code, right from the inception, we have been working on solving critical business problems. We started with supply chain, then we did NFT ticketing with IRCTC. We are working on land records. I came up with a very new use case in which we require ID verification. So blockchain alone in India, like it is always, we got a lot of challenges. So we have to do face verification, but without internet. So how to solve it? Blockchain alone cannot do it. AI alone cannot do it. But if we combine these two things, so what we did is we did the eKYC, stored the data on blockchain. Then if you have to do offline verification, AI models are there to help, right? And once you are doing it offline, it comes up with another challenge, that how to secure this offline data. Then blockchain comes into picture. Blockchain can make it extremely secure. That's how blockchain and AI go hand in hand. These are some of the examples, but we have to go a long way. So these are two complementary things. If used wisely, it can be magical.
Great. So I would like to step back about 8 years back, where as head of innovation at State Bank of India, we launched the Bank Chain Alliance, got about 30 banks, NBFCs, technology partners together at our State Bank of India headquarters, technology headquarters at Navi Mumbai, CBD. And the intent was to start evaluating the emerging technologies and the various blockchain solutions available at that time, which we started doing. We all call them for lunch. I like the lunch, they like the lunch. And I just told them two things. Let's shed our ecosystem and let's work in an ecosystem, right? So we got about 10 blockchain use cases through, right from fraud to KYC to lending. And now each and every bank is now going ahead with their blockchain kind of solutions. So I think blockchain is something that is based on trust, right? If we can get this trust decentralized and given to the communities, the citizens, the customers, I think that's really great. Looking at the scale of it, as head of innovation again in State Bank of India, I benchmarked our core banking systems, which is at 24,000 transactions per second. Today serving more than, having more than 1.5 billion transactions in a day. And that is covering more than 500 million customers and more than 700 million accounts. It is the most advanced, scalable, state-of-the-art core banking system in the world, developed in India by Indian technologists. We went a step ahead. Then we built our YONO, our banking super app. You only need one, which is today covering more than 50 million customers. And that is the world's first AI autonomic digital lending app, where we've been able to reduce the operating cost of lending from 60% through our traditional methods to now nearly 20%. It's a huge cost saving. Okay. So I think all these technologies, as long as they serve massive digital transformation, that's what we need to really strive for. And for blockchain, I think fraud is one very, very good use case. The total amount of fraud in India is has been more than 5 lakh crores in the last 10 years. So every year, nearly $7 billion is lost due to fraud by banks and their customers. Can blockchain help in that? Can we identify across various, so I'm doing an AI project where I'm predicting which of the banking channels across maybe our digital payments or ATM or POS could get hit by hackers and bad state actors. So I think when we do these emerging technologies, it's very important to make sure that we have the correct infrastructure, which is scalable, sizable. Long back, as I built up the Barclays Innovation Platform for Application Innovation, where we did cloud bursting way back in 2010. So here we can think of maybe a AI inferencing bus, and together through that bus, we can then attach the various blockchain solutions to it. Because to be very frank, a lot of the investments today are going in the AI world. In the US alone, in the next 10 years, there's going to be $5 trillion worth of investments in AI and deep tech and data centers. Across the world, there's going to be another $5 trillion. And I just heard some great news yesterday that that NVIDIA has taken a stake in Intel, which means the roadmap for both these great companies is going to be fantastic, because now if you're going to get in the AI inference ability at your data center CPU level, then it's going to further accelerate your computing, accelerate your storage, accelerate your working. So I think it has to be collaborative. There are a lot of opportunities, especially for India, where we've done great stuff. And I think we're not only the IT, services capital of the world. I think we are well on to become the deep tech capital of the world. And I think with also the, just to talk about the success of Linux, coming from the IBM world, IBM was the first company to, take open source Linux and use it in the enterprise world for mission critical systems, right? So I think if we collaborate better, we can definitely use all these wonderful technologies like AI and blockchain to build the next generation kind of automated, autonomic, agentic worlds. Thank you.
Hi, everyone. So I think my fellow colleagues have covered the government and the enterprise use cases. I would like to shift the gear and talk about the consumer side of it. So I'm sure many of us, when we go on YouTube, right, we watch a video and there we see a picture of Elon Musk and the audio, which sounds very similar to Elon Musk. How many of us believe that it is Elon Musk speaking, or the question comes in our mind whether we are watching or hearing Elon Musk, or is it Gen AI? Does that sound like a familiar thing? Yeah. On a similar line, let's say if you're watching a photograph which says it's a picture for an accident on a road, or maybe an Ambani's wedding where somebody's standing beside Ambani, again, Gen AI things kicks in, right? So this has become like a daily thing where we are struggling to find out whether it is a fake thing or a deepfake thing, or is it a real video. Now, this is where, if we are combining the power of this to technology, where Gen AI cannot create a transaction on chain, or the transaction which has been recorded on chain cannot be fake by AI. This is where we can use the intelligence with AI and use blockchain for trust as a backend. And if we are combining the front end and backend, this can create the kind of an environment that we needed from consumer application to government application to the enterprise application. Thank you.
That's a nice use case out there about. So the point which I wanted to cover was like AI and blockchain, like they can push data to each other, or basically they will have dependency on each other. Like AI needs trusted data that way. So like the inferences and everything is based on like reliable data source, etc. As well as there is a productivity and other system optimization which are needed for blockchain where AI can help in. So that's where I see that they can go in hand and help each other out. So AI being like treated, called as like it's gonna make, let's say, coding, building something available for masses. So that might just unblock us for other implementation and use cases on like typically into where there is a complexity. So like that. So that's what I feel.
So thank you. That's the insight, Nikhil and everyone. So next question straight coming from the financial companies like us, that regulated tech and governance is a core principle for any banking. Now with AI coming, where a lot of data is getting used, handled, how do you see that blockchain will put a trust into it? So over to you, sir.
Yeah, I think that's important because the RegTech is going to continuously come up, and it's already being implemented all over, especially for regulated industries like banking and BFSI and the rest of it. I think where I see it is especially in cases like fraud. That's a big issue, right? The fact is that we'll have to kind of transform. There'll have to be a technology refresh as to how we look at the blockchain development, because if we now look at AI development, it's not really focused on programming languages like Python. Also, blockchain, you're using, separate kind of languages. But now everything is going low code, no code, right? Where you can, I've used low code, no code very successfully. I've been able to develop both progressive web apps as well as mobile apps in maybe a week or two compared to, the 5-6 months we typically do in the enterprise. And I'm being a little polite out here. It takes sometimes even longer than that. Of course, these are all mission critical systems. So we have to be a little careful. So I think it's a huge scope for RegTech. If we start thinking of the blockchain trust as a service as, let's say, level 1, where the rules are there, then level 2, where the reasoning takes place, level 3, and this is in sync with the AI modeling and inferencing. Level 3, where we put in the decision making. Level 4, where we make it largely autonomic. And then level 5, which is the next generation kind of hyper intelligence, where you'll have these models going from billions of hyperparameters to maybe a trillion hyperparameters. And somebody told me, I was just chatting on one of the groups, and somebody told me that that's going to happen extremely fast. So I think this is a great area where the synergies of both these technologies can be used. And especially RegTech, where today it's very, very important, because lending is on an upswing. A lot of investments are being made. Everything, this entire investment cycle is coming a full circle, especially for countries, emerging markets like India, where Now the taxation is reduced, both the direct and indirect, now recently the indirect taxation. So this is going to boost up the economy. This is going to boost up the lending. And I've seen from my own experience that using digital transformation, using these emerging technologies, this has improved our overall governance, risk, and compliance. Now we exactly know how many transactions are being done, what is the volume, velocity, right? We can do further inferencing now. We can we transact on 1.5 billion transactions, and there's just one bank, right? And there's so many banks. Even Citibank has a whole lot of core banking and a whole lot of billions of transactions also every day, right? So if that can be, if that can be converted into, inferencing, and that can be then, like for example, especially when we have to lend, right? Can we map the different government schemes to the customers who don't have to the borrowers who don't have a banking history or transaction history, where if there is a, genuinely, if the borrower can't pay, then the central government can step in and, the guarantee can be invoked and the banks can be paid back. So there's a huge amount of data that can be processed. And this will simply add to a lot of economic value add. I mean, cloud, just to think of it, over the last 20 years, I mean, cloud started early 2000, and it's got about 150, economic value add. I think AI, along with the rest of the deep tech stack, will get probably 1,000x economic value add as we go along.
So what's your thought on identity? So today with the Gen AI, not able to find out whether they were right or whether they are listening really. When identity will take us, where identity will lead us in the next few years, can you give us insight?
Yeah, certainly. I think, it is going to be a very, very important Lego piece in all the value chain. That is what I believe in. So maybe I can take very simple, let's say, a couple of examples in order to expand how in the financial world, properly just restricting only on the fraud segment so far, right? So video KYC has been approved by RBI. Many years have been there where we have been able to onboard successfully many, many humans into it. Now it is getting equally difficult. Whether the person sitting on the other side of the screen is a human or not. It is very easy with the advancement into the Gen AI to create a mimic of yourself, right? This is where identity again plays a role, where we may introduce different levels of assurance. So it is not easy to beat this kind of a video KYC. In fact, we might have to use AI to beat AI. And this is where I believe adding a component of identity into it is going to be very important, where we may be doing multi-level check in order to ensure that we are verifying the person who says that he's so-and-so. The second use case is where, we are experiencing where all those digital media that we are interacting today have been only envisioned with human as a customer segment. Go on to Make My Trip, go on to Amazon, all of them would typically ask you the first screen, which is a Cloudflare screen, says that, prove me you are human. And we made a tick to go further. However, this is also changing because we are now entering into another customer segment, which is AI agent. Are the applications ready for it? And this is where they may have to also authenticate agent for their identity, whether these agents are belonging to the legal entity, whether it could represent a human or it could represent an organization. This is where potentially all those agents need to have an identifier, and that identifier should have a proof of humanity that says that, okay, this is an agent belonging to Ravi, and Ravi is an identified user on Amazon.com, and that's why I'm allowing this agent to enter and maybe do commercial activities. The third interesting use case is where I believe, again, blockchain and AI would come in, is where if this identity is anchored on chain, I would have a way to verify this identifier and this identity is not fraudulent, right? We have given our Aadhaar card at the entry gate, right? When we were coming into the premises. The lady at the front desk literally has spent less than a second to verify that this picture matches to the person. She took the card, said there is a card, you are approved to go in. There is absolutely zero matching between the person who is entering versus the person who has presented the card. How can we prevent those kind of fraudulent activities? And again, there is an interesting way where we can, we can introduce the way where a face matching can be done against this particular government issued ID. And it ensures that, yes, the face matches to the ID, no human errors, and we can secure those premises as well.
One more question on the small scale projects or the company who are in the start.
Yeah. So the use case are going to be different, like what domains they are in that way. But if we take a recent example, like recent meaning still in the world of like when we had COVID and all that. So there was rise into people joining multiple organizations and not let's say appearing like joining on the day and or that's what was happening that way. So what if like all organizations come together that way and then they have a common like database of all the candidates that way. Now one thing is everyone is doing the background verification. Probably that's where we can optimize it from that perspective. That's a good for organizations as well as individuals and as well as companies will have like secured and guaranteed data around that. So that's something which I can think of. But there are various use cases around startups into particular domains, like which we have seen through hackathon as well. That way, whether it's lending space, which we went through right now, or like other are on the edtech, like or the various certificate verification and etc. So that's what I see.
Can you share your idea?
Yeah. So it's not just about farming. We need to think wider actually. What these technologies are bringing, right? So blockchain is a trust layer, right? And AI can provide you faster processing, decision making, classifications, generative AI is there, right? So if we want to really make this technology democratic, we'll have to focus on use cases, right? Every now and then, like I did this NFT ticketing for Ayodhya special, right? This is something nobody could think of. We came up with the idea, we presented it to IRCTC. What we did there is we tokenized, everybody's talking about tokenizing financial assets and other things. Why not our memories? So Ram Lala's Pran Pratishtha will never happen again. It happened just for one time. You take technology to that level. So we embedded our memories, the selfies with Ram Lala, the videos with there at the Ayodhya, and put that into NFT. So we focus on the use case, right? And very excitingly, we did it for 500,000 tickets. And we were apprehensive, but the pilgrims will do this with these NFTs, whether they will be able to embrace this or not. They proved us wrong, actually. Within 3 months, we got 1.5 million interactions, right? So think of making a wise use of the technology. I'll tell you one more thing. Think of the day-to-day activities you do. Now, one product that we have launched is My Mints. We are tapping the true potential of loyalty there. So loyalties are siloed. These are not, you cannot use it interoperably. So we are using the use of both the technologies, both blockchain and AI. So what we are doing is using blockchain, we are making these loyalty points interoperable. So more than 50% of the loyalties vouchers go unused, right? Why? And we all have so many vouchers in Google Pay, Paytm. I don't even see it just because I'm not finding what I'm looking for, right? So discoverability is not there. So using blockchain, you can make it interoperable. Using AI, you can make it hyper personalized. So what we are doing it, we are making it hyper local, hyper personalized, and interoperable using blockchain and AI, right? So what would happen when we do this, right? We are envisioning the day will come where we'll be earning loyalty everywhere, and I'll be able to buy a fridge. Even I will be able to pay my EMIs from these loyalties. So loyalties carries such a big potential. And this emerging technologies which will make it happen, right? So we want to make it big, massive, just because everybody is looking for, right? So inflation is highest at this time, right? So we are not getting support, though it's gonna sustain for at least inflation sustains in India. So how to make it easier for the consumers, right? How to help them other way? So loyalty could be one of those ways, right? So AI plus blockchain is making it happen. So let's think on the use cases. We'll find a lot many.
Absolutely. With this, thank you, panelists. It was a great
I'll just
discussion.
add one more point to it. Is the first time in technology history that where we can talk to data, right? And we've got enough data, right? And so all these technologies like AI, blockchain, low code, no code, MLOps, data science, data pipelines is something that we can now talk to our massive complex application ecosystems, our data source systems, right? And bring out the best, bring out cutting edge solutions. So I think it's a once in a lifetime opportunity for technologists, non-technologists, managers, entrepreneurs, intrapreneurs, startups, enterprises to conquer the world.
Summarize it really well. So with this, thank you, panelists, and I'll ask Yogesh to give a vote of thanks from City.
Next, we have John Augustine sir from IIT Madras.
Okay. Okay, so thank you so much for the opportunity. Thank you to Citi. Thank you to LFDT and all of the people involved. I'm going to shift gears a little bit. I don't belong to the financial industry. I don't belong to a banking industry. Unfortunately for the students, you're going to have to deal with one more professor here. Sorry about that. But I'll try to keep this. I get what, 20 minutes? Yeah. All right. Well, the hope that I have is this: that we'll get back to the basics just a little bit, have some clarity. We're talking about blockchains. Let's just get to the foundations and just get to make sure we understand what we're talking about. So that's the sort of the purpose of this talk. But I'll also try and kind of breeze through several generations of how things evolved. So, questions for the computer science students. What is a computer in its most fundamental form? If you took a theory of computing course, what was the first model of computing you learned? Huh? State machine, finite state machine, right? This is how. With that in mind, thinking that, think of computers as this fundamental state machine, I'm going to ask you a question. I've asked this question before, so please, if you know the answer, or if you know the answer that I'm thinking of, don't pipe it out yet. But if not, this is open. This is a fun question. What is the largest human-made computer? Anybody? Human-made computer. Sorry? That's a great supercomputer. But I say that there's something much larger than that. Much bigger than that. Well, Bitcoin network, you're getting close. The internet. I'll tell you even something even bigger. The economy is a giant computer when you think about it. If you, at this point in time, you just take a snapshot of all of our wallets, our portfolios, and whatnot, that's the current state of the economy. And every little transaction that you perform is a small change in the state. And the moment you view that, this should excite the computer science students, because now we can bring our computer science knowledge to economics. We can learn from economics. We can learn from the financial systems, and so on and so forth. And no technology brings this connection as beautifully as blockchains does. Okay? So just wanted to, I'll be breezing through some of the slides because it's a longer talk that I'm trying to compress. Just so we, computer scientists, we need to learn from the economists, and we need, like, some of the brilliant ideas is what we've taken and co-opted here. And one such thing is this humble little thing called the ledger. This thing got invented a few thousand, probably hundreds of years ago. I can imagine a salesman for this old ledger back in 1500s or sometime saying, hey, look at this ledger. Every page has this thing. It's designed so that you can validate all of the transactions. It's designed with this amazing little binding over there. It's impossible to tear out a sheet of paper without somebody finding out that you tore out a sheet of paper. And just imagine, put yourself, that was invented several hundred years ago. Blockchains is just a reinvention of that, when you think about it. It's really all there is to it is just making sure that we can handle a ledger at the scale of modern needs. But there is one very important element that needs to be added to this ledger. And this is something that cuts to the heart of our DNA as a country. I'll tell you, I'll skip a few slides. We all know this wheel, the Khadi wheel. You may just pause for a moment and think about what this wheel means to you. Because I'm going to tell you that the actual definition that Mahatma Gandhi gave for this wheel. Okay, here it is. Oops, sorry. Let me read it out for you. Khadi mentally means the decentralization. Now, the word, we didn't invent this last 10 years. Decentralization of the production and the distribution of the necessaries of life. This was not a word that we invented 10, 15 years ago and this buzzword that keeps popping around nowadays. No, this is much more fundamental to our country. And goes back to the very DNA, because when you think about when you just implement a ledger with one institution in control of that ledger, we're in trouble. And Mahatma Gandhi's reaction was exactly to an institution that we are all aware of, right? No need to mention what institution he was upset about, where he pointed out, no, decentralization is what we want. And that's what we really need. But we need to be a little bit careful here. We live in an ecosystem. It's we need the decentralization, but at the same time, we need institutions as well. And this is the beauty of working with an organization like Citi, where they're part of the ecosystem. But are also willing to listen and collaborate, and that's really where blockchains starts to flourish. So going back to the title of this talk is about security and scalability. So I want to bring about the challenge. Like, if you think of the economy as the quintessential distributed trust system, because if you think about it, the economy, I said it's a computer, but it's not a computer the way you think about it, like a single computer sitting on your desk, but it's a highly decentralized distributed system, but it requires trust. So what can computer scientists and others, how can they view this? It's through this thought experiment. Okay, think of all of the participants in the economy, but unfortunately, you have bad actors in this. And when you have these bad actors, you need to build your entire system to ensure that trust is somehow maintained. You don't lose trust. So you build things like checks and balances, trust but verify, because you need to move forward, and reputation and blacklisting when things go wrong. And this picture is a macrocosmic picture, but turns out blockchains fits exactly within this picture, and I'll show you in a little while why that is the case. Okay. When you think about blockchains, it's basically, it gives you the trust anchor. So when I say distributed trust anchored by ledgers, every economic system that you can think of, banks, financial institutions of whatever type, at the end of the day, they rely on databases or some form of ledgering to keep the notion of truth together. And when that becomes somehow shaky, all bets are off. Okay. And of course, so far what we are doing is we are anchoring the trust on institutional things, which will continue to be the case. But then what blockchains does is it thinks about it asks the question, how do you decentralize that ledger? How can we ensure that it's not one institution that is responsible for that ledger? How do you make sure that this ledger is collectively maintained by a decentralized system with multiple players, multiple actors. And the core issue that you need to deal with when you decentralize things. If it is one entity, all decisions are made by that one bank or one financial institution. When you have a collection of people trying to maintain a ledger simultaneously, you need something called consensus. That is the very heart of blockchains. So let me, again, I love thought experiments. Let's look at this thought experiment. Okay, when you think about ledgers, it's like all sorts of decisions need to be made. Should I put this transaction here or that one here and all that? Boils down to a very simple question. Let's whittle it down to the basics. Should we go left or right? Should we add the transaction or not add the transaction in the ledger? Or should we blacklist this person or not blacklist this person? So simple decision like this. A bank can make this decision based on some policies, but we are thinking about a decentralized distributed ledger. So think about a simple thought experiment. Three friends, Alice, Bob, and Carol, hit the fork in the road. They need to decide which way to go. Of course, being a good democratic country that we live in, we do voting. Okay, Alice wants to go left. She communicates her vote. Bob, on the other hand, wants to go right. He communicates his vote. Carol wants to go right. She communicates her vote. So what should the decision be? Kind of obvious. Go right. Thank you. Right? There it is. Let's look at scenario 2. Alice votes left. Bob votes right. Now, Carol is what is called a Byzantine actor in this picture. And this, I will tell you the story behind the Byzantine. What she does is, it doesn't matter what she wants, she's just a disruptive person. So what she's going to do is claim right to Alice and left to Bob. And the whole thing falls apart. If you have if you design a ledger so that something like this can happen, the ledger will fall apart. You're not going to have a common ledger. Can you imagine? Can Citigroup imagine your internal databases getting completely messed up like this? What sort of a disaster that will be? And so that kind of gives you a sense, oh, okay, so the blockchain, there's something fundamental here, something challenging that was solved. This is the kind of fundamental consensus mechanism that was solved. And turns out, this nicely illustrates something. You cannot solve this consensus problem except under certain assumptions if more than a third or more are bad people in the network. So if you build a blockchain system, and if they claim that, like for example, Bitcoin claims that, oh, I can handle 50% bad or 49% bad or whatever, that's mainly because of a slightly different scenario where the computational power of the blockchain is at most 49% of it is with the bad guys. So that's the story. The rules of the game are slightly different there. But if it's just the number of participants in a consensus mechanism, anything a third or more, in fact, you cannot even handle a third. It has to be strictly less than a third. Only then you can do consensus. Otherwise, the bad guys have the upper hand. And this is the thought experiment that illustrates that point. Okay. So this is at the heart. And I'll tell you the story. 1980 and 82 were the papers by Lamport, Peace, and Shostak. They published 2 papers where they brought this problem out. So the story of Bitcoin and blockchains goes all the way back to the early 80s. And we love stories, mathematicians, right? The way the story was explained is there's this city and the Byzantine army camped around it. The army is not one unit, it's like multiple battalions. And these battalions need to communicate with each other to decide whether to attack or not to attack. And that decision is a consensus. Because if you half-heartedly attack, half the battalions attack and the other half run away, it's going to fall apart. Okay? So that was the thought experiment that led to this consensus mechanism. There was a history of consensus mechanism that was done. And by the time Satoshi came up with the Bitcoin paper, this was a fairly well-established working system. There were the things like PBFT, which Hyperledger uses, dates back to 1998. So, and therein, if you look at PBFT, you can actually search for practical Byzantine fault tolerance, Castro and Liskov paper. That 1/3 story will come back again to haunt them. Anyway, so Bitcoin came up in the late 2000s, solved this problem very nicely. You know, had this nice system of maintaining the ledger by electing a leader. The leader packages the outstanding transactions, adds a block, sends it to everybody. Everybody verifies it. If it's all good, they accept it, and go on, so on and so forth. I'm hoping that most of you have kind of heard that story before, so I'm not going to belabor that. Came up very nicely. And then all sorts of very interesting challenges have to be there, like how do you actually ensure that the blockchain is properly managed? This goes back to, for example, like every block in the blockchain needs to be kind of cryptographically linked to the previous one. That's nothing more than the little binding over there that I talked about earlier. So it's, we didn't quite invent everything. This, I'm going to kind of skip through a few things. There's some very interesting things. So, for example, if a block gets added in two different parts of the distributed network, what happens? This guy thinks he's added a block. That guy thinks he's added a block. And the information spreads. And then suddenly somebody realizes, hey, two people have tried to add a block when only one person should have added. That's a problem. So this is what we call a fork. How to deal with a fork? Well, you mine on the longest chain, so on and so forth. These are all kind of established issues that I hope you've kind of heard about it. So I'm going to kind of skip through some of these things. What I want to go is just quickly go through the generations of blockchains. Come Ethereum, here's where it makes sense to realize that blockchains are a state machine. Because when you realize that as you add blocks to the blockchain, you're just adding information that transitions from one state to the other. If you know that, then you can pause and say, wait, I can make this into a computer. I can write programs and run programs on that. That was what Vitalik and others realized, and out came Ethereum. That opened up this sort of a purely banking financial system to a much richer class of applications. The ability to write programs, and now every step in the program that you write is just viewed as a transaction on the blockchain network. Okay? And that was, just completely opened up blockchains to a much wider things. Basically, just state transitions. Every block, if there's a piece of code here, it's just changing the state in the Ethereum network. And they did some interesting things to, Ethereum was first running on proof of work, but then that was too slow. So proof of stake and things like that. I'm just kind of running through. I mean, if I'm running through, that just means that if you've not heard of it, but it's of interest to you, just Google up the keyword, and I'm sure you'll get a lot of information. But I want to kind of just jump through the generations. See, the problem with proof of work and proof of stake is still that it's very, very slow. So you have to figure out a way. And one of the sort of fundamental issues that people were dealing with was trying to get all three. We've kind of established decentralization. I mean, security, of course, we all know that that's very important. But to really do the kind of things that all of the speakers prior to me have talked about, like getting AI governance on blockchain, for example, you will need to scale, especially if something, I mean, the other thing I really liked was the person who said, if you can get something to work for 1.4 billion people in India, you can then figure it out very well, very easily for anywhere in the world. That's scalability we're talking about, right? So how do you get all three together? This is going to be a very difficult thing. You can, the conjecture is that you cannot get all three. So you have to play some compromises here. And one very nice compromise that happened was called the Hedera's hashgraph consensus mechanism. This is a sort of the third generation, if you will. And here the beauty is that, and by the way, I must add that Hedera's, this consensus mechanism is now on LFDT. It's called the Hyro project. So it's available for use if you, in case you're interested. So there, I don't want to go through the whole consensus because I'm running out of time. But the point I want to make is they said, okay, Bitcoin and Ethereum said, let's maintain the blockchain. Anybody in the world who wants to add blocks to the blockchain, you're welcome as long as you have enough computational power or enough ethers and things of that nature. Hedera did a slightly different take. Said, you know what? We're going to focus on enterprise use cases. So we will pick a few members of global renown and say, okay, let's form a consortium. And the only people who can run the network are these people. But that's just running the network. But the network itself is public. Anybody can build on it. Anybody can run an application on Hedera. But the people who are sort of the custodians of the network are a set of governing council members. And that is a very nice compromise because the set of governing council members is 32 in number. So that's like a large enough set of very high repute organizations. You know, we're talking about Google, Dell, Wipro, and several other such organizations. You can go look up, and they've made it geographically distributed. So there are some banks, there are some law firms, and so on and so forth. And all of these organizations get to run one node of the network. So there are 32 nodes running right now. And happy to say IIT Madras is one of the governing council members. So we are running one of the nodes for Hedera. So it is still decentralized, but it's not decentralized to where anybody can join. And this means that we can run at a much higher scalability. Okay? And there is a very nice hashgraph consensus algorithm that underlies that. I can talk to you later on about that. Okay, so I'm going to skip just a little bit to where's my. It's a very nice consensus algorithm. There's a real beautiful reason why it works so well. But that's something that I'm happy to talk to offline. But there is, going back to the issue of scalability and security, just wanted to throw out a few fundamental ideas that are there that help with scalability. For example, if you have a chain that is like Ethereum that is running and it's a very high trust chain, but it's very slow, what do you do? You can run what are called rollups. These are little parallel setups where every once in a while, what you can do is you can perform a bunch of executions on the side, but then keep updating a little state of that execution on the main chain. So you get the trust of the main chain without being tied to the speed at which the main chain operates. So this is an idea called the blockchain rollups. You can, similar to rollups, you can run a full-fledged chain on the side, which may not have the same level of trust, but keeps up, like every once in a while, the state of this side chain can be hashed and the hash can be put on a main chain. And then that pegs the side chain to the main chain. So that way the side chain gets all of the trust associated with the main chain as well. So this is one more idea by which you can sort of scale things up. All of these are, in some sense talking about decentralization, because even Ethereum, when you think about it, has become one monolithic chain. This rollups and side chains, they allow sort of the defraying of the computational issues. Sharding is another one. The same chain itself, if you parallelize within the chain, that's called sharding. Again, a challenging little issue because if you shard, if you run multiple shards of the same network, every once in a while there'll be transactions across the shards. And so you'll have to maintain some way to ensure consistency across the shards. So that can sometimes hurt rather than help. So sharding is a nice idea, but needs to be done very carefully. That's the message I want to send here. Security ideas, we've already talked about how blockchains go through this very interesting consensus mechanisms to ensure security. Also, the fact that blockchains are designed so that one block is built on top of the other block and cryptographically secure that way. But there can be lots of issues. One thing that I want to point out is any mistake that is on the blockchain is pretty much permanent. That is one issue to be watchful of. Again, if more than a third are Byzantine, you're in trouble. Poor key management can be disastrous. Again, just because you're running things on a blockchain doesn't mean that other cryptographic issues, the typical issues like a poor key management, leaking your keys to others or forgetting your private keys, these are, of course, disastrous issues to deal with. Smart contracts. When you write a program on your own computer and there's a bug, only your computer gets affected. If you write a smart contract and that smart contract has a bug, just imagine, this is like, in our academic setting, if you get one low marks, what they do is they actually post the marks on a bulletin board. It's like that. Your smart contract has a bug. It's there forever posted on the blockchain. So we need to be very, very careful about bugs in smart contracts. Of course, there's several other very interesting attacks that we need to worry about. Reentrancy attacks that cost Ethereum to have to fork. Front-running attacks. This is something the banking industry might be worried about. Some form of, basically, when blockchain is getting updated, there are some outstanding transactions that are not yet on the blockchain. Someone can observe that and plan their strategy based on what is likely to get on the blockchain within a few minutes. They might be able to observe it and somehow get their transaction, strategize and get their transaction ahead. That's front running. Need to be watchful for all of these things. This somewhat, people have touched upon this. This is very close to my heart now. I'm trying to, I'm a student of, I'm a professor, but by definition, professor means you're also a student, right? And one of the things I'm learning is the beauty of the interaction between AI and blockchains. So AI can be a powerful tool as well as a dangerous tool. So that is the one message I want to send. I think others with more expertise have already talked a lot about this. So with that, I am done. I think I overshot time a little bit, so I don't want to speak anymore. Just want to plug for one thing. This is a short preview. I have a 2-week winter school on decentralized trust and blockchains coming up at IIT Madras. Phase 1 is online. Phase 2 is in person, open for industry people, open for students. Please check that out, my own LinkedIn if you want to connect with me. So really looking forward to engaging with the community here. So thank you very much. Yeah.
Mention about some size target.
Yes, so thank you, Kamlesh. So the context of this winter school, for example, if you go to the web page that I've pointed out, is IIT Madras, we've set up a center called the Center for Cyber Security, Trust and Reliability, and I'm one of the co-directors. We have a few other significant, I direct the blockchain part of it, but we have a very strong cryptography part of it, including post-quantum cryptography. Pretty much India's best post-quantum cryptographer is in that center. We have hardware security, and we have program verification. These are the 4 areas that we are focusing on. Always interested in engaging with industry, always interested in engaging with students. Right now, we have several positions open for interested students and early career people, project associate positions where you can join in. Lots of very interesting projects going on. Happy to talk to you. Very eager to connect with industry folks as well. So yeah, thank you.
Thank you. Thank you, Augustine, for your valuable words and sharing a new perspective. We'll have a short break of 10 minutes and we request Ashish Singhal to present a Momento as a token of love from City.
Thank you. I feel loved.
We are privileged to have you here, sir.
Thank you. Yeah. Thank you. No, pleasure. Yeah.
Thank you for the wonderful talk. I had a query regarding this slide of
We'll
yours.
join
Yes,
after
yes.
a short tea break of 10 minutes.
Yes, cap theorem. In fact, cap theorem was. Yeah.
Banks have done this. State banks, pioneers of that. All the innovations, transformations that we have by all banks. There's no transition moving whether inside the organization or outside the same thing. Even inside the organization, especially by IBM and all this extent, once in a lifetime opportunity, freedom आपको मिलता है, freedom भी आपको मिलेगा, so much better. I built a digital space. Industrial system like that. In 2002, we talk about banks that we have done the transformation. This is 2002. All the very best. This is not yeah.
So, hello, am I audible, Baswa? Hello,
Yes,
hello.
Abhijit. This is the break time.
Oh, sorry. I think.
Good afternoon, everyone. Please be seated. We'll start with our next session now.
Okay, shall I resume the recording?
Hello. Hello. अच्छा ऐसा पॉइंटर है का
कनेक्ट हुआ है वो दिख रहा है ना ये आपका ही है ना
यस यस
अभी कनेक्ट हुआ है
निकाल के एक बार निकाल के पूछते
आई थिंक इज कनेक्टिंग कनेक्ट हो रहा है ये आपका ही है log into Zoom also
नहीं नहीं
log into Zoom not required जैसे जॉन का चल रहा था अभी
डबल स्क्रीन करना है क्या कुछ ऐसा
और तो Zoom मीटिंग ज्वाइन कर लेते मैंने शेयर किए और उससे शेयर कर
इसमें तो आना चाहिए ना वो इसमें ही नहीं आ रहा
हाँ आई थिंक कर्सर इज मूविंग मतलब दिस इज कनेक्टेड दिस इज नहीं है वहाँ पे डिस्प्ले नहीं हो रहा है
तो आपने वो डिस्प्ले एक्सपेंड किया ना
प्रोजेक्ट कर विंडोज की
ट्राई डुप्लीकेट हेलो good afternoon everybody and I think post lunch session as usual नहीं चालू है so I think after our initial sessions which we spoke about technology Ashish sir spoke about how banking is adopting blockchain in the next 15-20 minutes we'll talk about how blockchain story in India what all things are done at all level government or corporate or at a startup level and so on. Yeah? So I think today morning I was at this office called as a Palvi Agrico today early morning, and what they are doing, they are creating a marketplace for farmers. Like we have a Flipkart or Amazon where we can buy anything, everything the way we need it. Okay, and every product which they are building, they are seeing a larger vision is that it's a completely only for agriculture domain, so called as agri-commerce marketplace. So whatever you see there, right, including tractor or those wires, everything they track.
from source to destination, how it has been reached to the farmer. And they don't know blockchain, best part, right? This company doesn't know blockchain. Rather, they don't know, they just know that this is going to be a futuristic model. Everything has to be given to the customer in a good way, right? So farmers should believe, start believing. They started with that vision. They did not started with the vision that there is so-called technology called blockchain. We have to implement it for safeguard or secure or create traceability. Look at the founder's vision coming from all that farming background, and how he has been building technology, how he is building operational model, and moreover, he is looking at India's rather world's first agri-commerce model. With that vision, by saying that it will be 500 plus points to support those so-called farmers in Maharashtra, almost 5-6 lakhs. Like while we have almost 1.5 crore farmers. So it's vision like let's templatize Maharashtra, then go to here and there. So utilizing technology like AI, blockchain, that is a secondary for him. How do we create a value? That's a very, very important. So looking at that angle, and what's his vision that I was in Germany or some other countries, they were tracing and tracking every product for end users. With that vision, he has started. Like he said, in European Union, there is a DPP, digital product passport, which is going to be there for all those material like cotton or steel and all of that. So I think this will also come. And on the ground, they have, I was amazed to see they have almost 350, 400 people on ground to educate farmers. Please come on to this platform and start buying everything. And it's not only buying from, the way we know our science, right? Maybe fintech or banking, how to onboard customer till do transaction. He has created such a nice analogy how there will be DPI for farmers and how every crop or every thing has those 600, 700 parameters by which they will be able to tell at any point in time what is your soil condition. So there is a problem statement which he has found out and said, why don't we utilize it? Then I spoke about blockchain and all, right? So then he started understanding more power of those technologies. So I think sometimes people know what is that they want to solve all about, but they don't know like how do we really scale those statements. So in a global scale, when you look at what is that we are looking at, we are looking at better customer expectations. So farmer, that's what an example, or maybe our customers. We are looking at how to utilize data which we have generated last 3-4 years. Platformification of every opportunity. Say example banks, or how companies are getting into technology companies rather than just proprietary healthcare or banks. Then other angles, whatever they are doing, it should be around better trust, security, risk, and it should be always aligned with the ESG, which is a now new norm. While India, may not be that powerful as of now, but we have seen the power of, or not power, but impact of cyber security fraud. So I think this is how every bank, customer, or every country looks at how do we solve this, right? So customers are changing. We have seen how customers have changed from those so-called feature phones, how these logos has vanished, right? None of the logos we utilize, maybe one or two, maybe based upon who is part of that generation. And while these logos were the best logos that moment, they did not anticipate things are going to change. The way we transform, the way we communicate, the way we do the logistics. And from this horse cart which we have seen, that metro, it's all because of some of these factors, so-called technology. Communication technology 20 years back is now getting into 5G or 4G, right? So that is why we have seen from how PC-based banking has moved to now mobile banking or internet banking. And we'll not stop there. We'll get into some other zone after 20 years. Maybe we not, the next generation will think of, okay, this is how we will do the banking, right? So with evolution of a lot of channels from desktop, browser, mobile, in the back end, we have started adopting more APIs or security or AI and blockchain. And that's how we have seen the customer is changing. Customer is changing, and we can't live without these logos now. While we were not able to live without Nokia or those logos, but that has extinguished because of a technology impact. Now here we are, where we can't live without Netflix. We miss majority of our generations, or we can't do anything without Zomato, Panda, right, or WhatsApp, or big tech companies. And while we move on, we are moving from Web 2 to Web 3. In Indian context, we have seen huge impact, right? What impact? Internet adoption. Huge internet adoption happened after 2016. Almost everybody is having internet. It's not like those days where we used to go and buy, get into cyber cafe and keep waiting for some hour. So everybody carries that, right? So expectations at all levels is changed at Indian context. If you look at social, like we are almost #1 everywhere, Instagram or YouTube or WhatsApp, Google, Facebook. So why I want to say, similarly, banks have also changed, right? So banks are no more so-called only branch. They have evolved as apart from traditional, they keep doing traditional, but they look at how customer is changing and how we should do better resilient customer services from digital banking to so-called intelligent banking. While we are doing this, some banks looks at future, how we'll be ready. Like we spoke about Citibank or HSBC. They always think what is going to come tomorrow on the corporate side and they are ready for that kind of a customer experience, right? Now, majority Indian banks are either digital or traditional, and very few are pro for blockchain or any of those, provided how we have seen rise of IBDSC now taking all 18, 20 banks together to build some kind of a path-breaking business model, right? So this is what we have seen. At the same time, we have seen Indian context rise of DPIs. So we will be among those countries where we will at least for anything, everything we have DPI. Education, we have DPI. Maybe we are not experienced. Or logistics, there is a DPI, where maybe those truck drivers know which is that DPI. For our context, DigiLocker, AEPS, but none of these DPI talk to each other. Why? Which is a fundamental concept of DPI, they should talk to each other, right? Interoperable DPI. Now, slowly, it will pick up the way we will need, right? So, and we have seen DPI impact, like the India is looked at a model for other G20 countries and many other countries. I think Peru or many other are adopting UPIs. But are we good enough after doing so much of things, right? Are we good enough after internet adoption and modernization of world, right? So even if you say we are good enough, still banking context, because I'm a banker, I'll talk more of banking. So still we have a lot of challenges. We are challenges of removal of bad assets. We'll talk about mule accounts. We have challenge maybe for data privacy. We have challenge of uptime of the systems. We have challenge between bank to bank connectivities or bank to fintechs. Are we really doing good? We have challenges, majority of regulations given by RBI in a banking context or IRD or SEBI. It's all about how do you safeguard banking, right? How are your processes? How are you onboarding customers? How are you at any point in time doing fraud reporting? Some of these examples, like fraud reporting, like suppose you get into any fraud, while you will report on contact center, reporting of fraud so that is reflected into central fraud registry for another NBFC takes 40 days, sometimes 45 days, because that's how we are laid the process in the backend. While we are happy for a better customer onboarding, UPI or Aadhaar we are done, but in the backend there are a lot of work to do. And as a banker, when we sit inside of the bank, we know this is how it happens. But when we get into some problems, then we solve with the help of interbank or with the help of regulatory, and these new regulations are coming on top of an existing one. So going further, while bank have issues or problem statements, when we are entering 2025, we are still having a lot of intermediaries. We have a MasterCard, Visa, we have maybe Zomato, right? We pay that fees to them, Ola, Uber, right? While driver gets 60% or 30%, just for through platform, they get huge money. There is a still challenge of millions or a billion people may not have a identity or a digital trail. We had a lot of unregulated problem statements like peer-to-peer lending, which will keep happening, or cyber frauds. And still we have some of those check systems or KYC and that global intention of SDGs. So when we are sitting there, we keep hearing some news, right? Rupees 2 crore digital gold theft has happened recently in June, right? And I don't know, right? Without my consent, this was happened. Why means as a customer, and so many, almost 435 customers has happened. Tomorrow it can happen to you also or anybody, because this is how we have created our centralized systems. While this is happening, and look at this news came maybe recently, while this has happened in June 27, before 10 days, this TRI is launching digital consent. While it is already in a pipeline, the digital consent mechanism has to be done, and as in India, we'll be able to do easily because we have those DPI railroads. I think 5 or banks, or they have identified some 5 players also to do this kind of a POC pilot. And it's good to see that our friend Alok ji is already working with a consent mechanism with the central government on Manrega kind of use cases. So while it is already there, people are already utilizing it. And now another problem statement, like when Sanjay Malhotra ji when took over as a RBI governor, and he said that RBI has pumped in around 43 lakh crores back in December, January, December, because that was a need of a liquidity for banking. And we have seen how many times we have done a lot of reforms on the repo rate in the last 2, 3, 4 months. So I think, see, these are those problem statements. While some company like BlackRock says, and they are investing into some digital asset, right? So even we have seen the various announcement by Trump, followed by many banks are coming on a digital asset tokenization. Still, this problem remains, right? So what are problems? Rather, these are the aspiration of a majority of the banks. So as an individual citizen of India, I always look at how can I be a better bank, do better banking without frauds, right? How can I do those integrations with my fintechs or any other partners? How the cyber investigation can be on the spot rather than wait for 40-45 days. So majority things, right? How regulator looks at and adding new methods like 2FA or PCI relevant expectations, or they keep coming with the additional method like card tokenization. So these are all they have done to mitigate many of the things which are happening, right? How do we do it in a better way? Yeah, so now let's look at one example where, and this is a public news, so we do not have to say. So Kotak Bank, the problem statement, regulatory non-compliance and operational inefficiencies. Or say talk about Cosmos Bank has a theft of 94 lakhs some years back. Or so goes with the SDFC technical outages, right? So majority organizations are sit on a technical debt while we have a financial debt concept. And we have seen how Paytm or Binance can see these root cause of all these things are maybe lack of transparency or lack of traceability or lack of or a manual intervention, and lastly operational bottlenecks. When you start thinking, okay, how do we really resolve these things? So majority, the way we understand, it can be resolved with the help of a right deal identity. Right deal identity may be knowing who is a customer, who is an employee, and which are the systems are part of that workflows, and how process tracking is happening for every of those operations, and how data is stored, either in DPI or either in centralized systems, either decentralized systems. So going back, again, look at these things: lack of transparency, traceability, manual interventions, and operational bottleneck. And this is something comes and say, I will safeguard every other thing. So more or less, we will be able to solve. So how do we solve? Maybe in combination of blockchain or cloud or data or AI, right? Furthermore, when we talk about a blockchain per se, right, or AI per se, it's always being advised by any of those regulators. Please always utilize better technology to really do resilient organizations, right? Resiliency by finance or operations or organization. Now, why I'm saying that it applies to country, it applies to every organization, it applies to every business model. Like example here, when I do a customer onboarding, it takes 3,000 to 4,000 or maybe 5,000 rupees to open a bank account. And sometimes I'm not happy, so I go to another bank account. And that's how typical impact on a regulator, right? So Mr. Prasanna is going and opening 17 accounts, and he just banked with the 2 accounts. And that too, then that is why we came up with the Sarsai, which is a CKYC. That too on an existing centralized model, and it's a good system where you have to, at the end of the day, upload those KYCs which you have done today. But it's a manual intervention. Look at all those 4 boxes we said: manual intervention, traceability, tracking. And sometimes it happens, sometimes it doesn't happen. And if I ask how many of you know CKYC number, 1 or 2 people will say, I know Aadhaar, but not that. Now CKYC 2 key is coming, or rather it has came with all the enhancements. How do we do better? But they never thought of how do I go back in drawing board and completely revamp the system so that I can do KYC once, and same KYC is being utilized by another entity with my consent, right? And that will come, right? So that I will say in Aadhaar 14 parameters, I will give only 2 parameters only for 45 days, and then later on I'll go and use other banking. That slowly is happening. How? Because now new norm is coming: 1 number, 1 Aadhaar, and 1 bank account. So I think interoperability will come. But opportunity is that apart from doing KYC once, it can be utilized by other regulator also, insurance or SEBI or telecom also. So with this model, we can go back in drawing room and see what more things we can implement, right? So in Indian context, when we start blockchain adoption, I think this was a very good story. In the last year, came in October, September, CDAC has launched this national blockchain framework and many other areas. And they have launched, apart from many templates, how blockchain can be implemented in government, banks, and so on and so forth. Similarly, I'll skip some of those slides. When you talk about any use case of blockchain, it will be at only 4 areas. National level use case, maybe we are living with the CBDC. If you have heard, e-rupee, which is based on blockchain, or other like DigiLocker may come on blockchain, or maybe health card come on blockchain. At a consortium level, where IBDSC is driving Invoice Hub, or there are insurance companies are driving a new way of doing co-insurance, which is already happening. We keep hearing supply chain, food chain, or agri marketplace, which I said one example, right? Or at a global level, maybe cross-border, which is similar to digital currency is going to come, digital identity, or a trade finance, which many banks are part, right? And at an organization level, how do I safeguard all the processes, people, data, right? With this kind of identity, security. So you will find more or less all blockchain enterprise use cases only around these 4 areas, right? So now with that 4 areas, a lot of adoption has happened in a Indian context. Almost 15 states are working on blockchain at all levels, maybe study or maybe at a scale use cases. Like West Bengal, all birth certificates are on blockchain. Bihar recently announced at 10 districts one e-voting system, while Tamil Nadu tried. Kerala tried crop insurance, right? Andhra or some of them have tried land registration. And you have seen at all, RBI, IFSC, SEBI, everybody done some or kind of a POC pilot on a blockchain, right? Like IRD is doing very good use case on a parametric insurance. It's not in public, but they have working on it. Look at IDRBT started that generally, how can we create a banking-based blockchain platform blueprint? But it over a period of time, it did not happen. But NIC, and I think Alok has implemented something which with IRCTC, right, which is NFT tickets, and the e-rupee, ONDC. So I think almost all Ashish sir is driving IBDSC with and I think we'll see some more announcement with ITN coming into. So these are actual use cases, and as it is a foundational use cases, is not visible like mobile app. But lot of working is happening in a Indian context, and a lot of companies are working, like EYs, Infosys. When we speak about many our sessions in colleges, people do ask, blockchain is there, people are, what is there for me? So we always give example like these are the players, maybe these are 9s, but many more are there who can provide jobs, right? So jobs could be at a different levels. And some of these path-breaking examples, like traceability, which we say, right, GS1, I think Kamlesh knows how, I think being a advisor to them, how TRI is talking about a consent mechanisms, or IRCTC use case. Polygon has done with a Geo platform, or Flipkart has done similar kind of a thing for tokenization. Ironverse has done some work on digital identity, and IBDSC. When I think at a banking context, we looking at IBDSC with heavily because they are well supported by banks. And nevertheless, we will see a lot of success in coming days. So these are the roles, I think. If you look at the state level, right, every state, and by the time we reach to the next month, some other state will come and do it. See, it is not in public like news we have done, we announced. That is why we may not know. But the way we understand, Rajasthan has a blockchain center of excellence. So with Telangana, last year they did Web3. West Bengal, I said those birth certificates. Jharkhand also do a lot of farmer relevant use cases. Maharashtra, I think there are a couple of use cases, organ donation, they do it on a blockchain. Karnataka, I think some POC pilots, and we are driving some Karnataka-led complete blockchain, smart state backed by blockchain. Kerala, I think the opportunities that government, banks, every other organization is looking at, at India Blockchain Forum, I think these are those players who are contributing since last 7-10 years. There are many players. Earlier used to say we used to count. Now it is countless. At least there are at least 300, 400 companies at all level. They are supporting blockchain, Proof, Simplify, Transbank, and there are some successful stories like Transbank working closely with almost 50+ banks. These are successful stories. Simplify or settlement on CBDCs, digitalization on CBDC or some cross-border payment. Origraph, India's own layer 1 blockchain. Microfinance use case with federal or GVs now has become a backbone or a sandbox for a lot of Web3 projects. I think their opportunities are huge, and some of these blockchain infrastructure companies like Chaincode has its own blockchain as a service platform, so-called ZIV, and they are there for a long period. And Neeraj, who drives a lot of things for in many banks along with IBDIC. So I think that's a huge impact which is coming, right? When we used to talk about some concepts in 2017, today we see NPCI and IBDIC how they are driving scale use cases, either on digital currency or on invoice discounting. But that has happened before. There were many tries. Many banks came in, let's do something. There was a consortium by Infosys for 7 banks for trade. SBI did with the Nepal, or Yes Bank has done with Bajaj Electrical. Income tax, 6 banks including DCB, we tried to do 15 GS, 26 years, where we have to do repetitive for every bank. So do it at one bank, that data will be replicated. So these are things that happened. And apart from those organizations, RBI Innovation Hub, STPIs, IFSCA, various state and academic use cases, well supported by many of those companies. Primarily in banking, while there are very small use cases about trade finance, but there is a huge. When you start digging out, you will find many 60, 70 use cases. I think one of those use cases we are talking internal to banks, when we do the wholesale lending by a large bank or large NBFC to smaller NBFC, that reporting has a lot of frauds. I'll take 400 crore, but I will not utilize all 400 crore. But on paper, I will say I have used 400 crore, and same security I will ask for 2 banks. Give me next level of loan. So there are many such gaps, and when we study those gaps, banking is an example. Look at every sector. You will find number of gaps, and you will see key use cases around tokenization, CBDC, identity, metaverse or cyber security, then cross-border payment, compliance security, and largely on how do we have a net zero impact. I think tokenization is a big way. The way we had a web economy, how tokenization will be helpful. I think the way I feel, every asset in the world in next 5-10 years will be tokenized. The way next generation is going to come. Look at those real world asset or movie rights or the even banks, like we heard, right, Citibank and how HSBC are doing gold bonds and all of that. While these are there, tokenization is there, there is a large opportunity for a better regulation. And good to see like IFSCA and all, see whatever it will come in the tokenization, some of the countries like US or Hong Kong, they have their own laws. But in Indian context, we are collaborating with FSBs or other studying that, and whenever we'll come, we'll have a better guidelines, and we'll scale all of these business models which we see that we are lagging behind, but we will not lag behind, right? So last 2 use cases which I see, how do we create a net zero momentum on a carbon footprint, carbon tokenization? I think that will be the one of the powerful use case apart from cyber security per se. So in a nutshell, majority of use cases are at maybe 4 or 5 levels only. Security of record keeping, right identity, smart contracts powered by some kind of a rules regulation. How do we have authenticity and traceability? And last 2 are more on tech side, which is a decentralized infrastructure and asset tokenization. So majority use case, we start thinking, which are all those, they cater across only these 6 areas. Yeah. So, and well supported by hyperledgers or many other as a blockchain as a service platform. So over a period of time, while you have a use case, companies will create their own. I'll not be surprised NPCI launch something on tokenization. This is my blockchain as a service platform. Or I'll not be surprised some consortium of insurance will say, this is for me. Or Orissa, the way they have emphasized, this was presented to Orissa and they wanted to do like this. Majority of use cases, connections with all the DPIs, all user access to their internal employees, and it should be agnostic to any blockchain platform, right? I think Sudhin was talking about very nicely how it should be an inference layer backed by a blockchain, and a lot of those use cases are ready to spin off. So I think that's how we will see. And I have just categorized, I think I will skip this because at every industry we have at India Blockchain Forum repository. You talk about any industry, we know who is working on what at all levels. Yeah, I think these are all again same companies who are working in a Web3 world. So what India Blockchain Forum is all about is to promote blockchain in the right direction across all levels at a government, corporate, or banks, academia. And we are doing this rigorously with all of our members and friends, mentors. So I'll stop here. And yeah, if you have any questions, or I'm always around. Yeah. Yeah.
Very naive question. Sir, we have had a Demat account for years. Where our stocks go? Has there ever been a thought that our money also can go into the Demat account because it's
I think that's I think Demat and
not as fancy as CBDC, but it's something which is very practical because Demat accounts have been there and
it may happen, like at least in a regulatory perspective, there are some interoperable models are coming, KYC or PCR. It depends upon how SEBI will look at this as an opportunity and bring on. But the way I look at CBDC is coming, so CBDC is not pro for RBI, it is IRDA or even SEBI also. So as we move on this currency, which is a fast, secure, and when it matured, I think we'll find multiple other use cases which we have not thought of in 90s, like some on-the-spot loan will come, or we'll be able to buy shares on the spot on an app, right? Which has happened over a period of time, how maturity of APIs, cloud, similarly, I think why not? So when we are moving from intelligent to autonomous banking or autonomous finance, so this will be able to come. But again, it's not, while technology is there, how it is easy on a better process and regulation, those models should come. Yeah.
Hi, this is Amit here. I saw you had mentioned a lot of use cases around the banking and other implementation. And I just would like to add one more interesting use case for the audience, whoever are here. Security lending is one of the area where most of the big net worth individuals are using it. I think that is one of the area maybe you can think about and maybe throw some light how we can use the blockchain to enable the.
So I think you will be able to add, but I'll tell you how future look like. For example, security lending. So wherever I think we discussed with Ashish sir also some weeks back, and I mentioned also, right? So it's like NBFC in wholesale lending, we do take loan from larger banks, and it's called as security for against some security. But at the same time, I can go to 2 banks or 3 banks. There is no interoperability between banks. How do I give a loan to same NBFC against same security? Moreover, internally, when I take a loan, and I have to report back to that banking how I am utilizing it, right? There is no mechanism which is like blockchain based or single source of truth. Okay, you have given me 400 crore and I am utilizing all 400 crore only for that loan, or whatever you have given for a motorbike loan, I am utilizing to adjust my previous. So these are all many ways we look at it. Yeah. I think in a trade finance, when we'll go and when we start tokenizing invoices, when we start tokenizing trade documents, like how some banks have done on, I would say, those FDs, how it can be traded. I think there are a lot of new models will come over a period of time. Yeah.
Because the securities typically which is sitting in your demat primarily being utilized only by the large banks or some mutual fund houses, right? We retail investor doesn't use our securities to generate more money when it is sitting in idle in your demat account. So I think there are some use cases which probably spun around that gap to enable the retail investors to utilize their assets to maybe further lend into the market and probably get benefit out of it.
It's a good way to see how they are part of a larger crowdfunding or be part of creating liquidity for existing banks. But again, it will drill down how these models will come to India. Yeah.
Technical perspective.
Yeah.
Also the consumer perspective, it works very well, because if you were to just look at how crypto lying in my account, I can earn on that, right? And that's what I was trying to say, that all the use cases which are can be done in a crypto world can actually be done in our CBDC world, the rupee world. One piece which we have to remember is what is the systemic risk we will end up creating, and RBI will always be wary of that, because at the end of the day their core responsibility is to ensure a stable financial system, right? So, and that's really what comes in between. Otherwise all these things are not logical, supported by tech. We just have to look at what are the edge use cases, how can it probably be misused by a miscreant and create a significant financial issue for the overall ecosystem.
I have another additional question. So how do we get into the brainstorming sessions with such such people? I know, I mean, you are working with the bank consortium, right? So when we start thinking as a normal citizen of India to solve certain problem of our retail customers, there are certain, if there is an platform on which we can come and discuss and fine tune, reiterate, redefine the solution what we are thinking. So I have a friend of mine who we have built a simple solution on the sec lending perspective as well. But I know, I mean, it is, since we don't have an infrastructure or maybe a way to handle such sec lending scenario in India, we made it for a US market, right? And it was basically appreciated by a lot of clients whom we are serving. But yeah, we wanted to try that out in India as well, right? I mean, there are certain challenges which we already have sorted it out, but there could be something more which we can simply sit down and find out, okay, this is the way we can do it. Probably this could be a new thought of innovation for new brains who can try that out and launch in the market. Like I had seen one of the guys sitting here, they also have tried a few things. But I would love to discuss these practical challenges with any people who are.
I think when you look at any tech, right, there are a lot of forums or recognized forums, or in banking context, there are SROs, some financial, like you spoke about this, right? So these SROs become voice for a regulator or assistants. Like we have seen, video KYC was not there, where IMI came and start pushing, right, creating papers. CB has approved, later on RBI has approved, and then maybe those companies like IDFC Sciences got some larger approach. I think at least in financial sector, we have a voice, PCI, where we keep talking about how CBDC will be offline while there is no solution, or FACE is there.
One is like Prasanna is saying that today the situation is a lot better because of the SROs, etc. But otherwise, this is a good start. This forum and community from a blockchain as a technology perspective, around that you want to do. Second piece is RBI themselves have this sandbox, right? And so you obviously can't, you can, but you should not go there if it is very native, etc. But once you have discussed in such forums or otherwise, etc. Prasanna, Kamlesh have been veteran people, and they've been supporting the cause of overall industry. And through these SROs, you hone it a little, and then the best piece is to go through sandbox, because the real test of things come in only from a regulatory side, which no matter how many years anyone would have spent in the industry, regulator can still say no. But the sandbox is the best way to go and test it, because once they say yes in sandbox and you test it out, etc., then it lends a lot of credibility to the entire innovation.
Okay, thank you very much. Yeah.
Thank you, Prasanna, for your insightful session. To honor your time, may I now request John Augustine, Professor, to hand over a memento as a token of appreciation.
Come on, the middle. Thank you.
May I now request Deepankar Roy, Professor, NIBM, to share his vision on blockchain.
It's a
It's a panel. It's a panel. It's a panel. It's a panel. Vedant, Mr. Vedant, Deepankar, Neeraj, and Devansh. So please welcome Mr. Deepankar Roy, Vedant, Garia, Neeraj Singh, Devendra Fadnavis. Please all come on the stage. It's a panel discussion on future finance with blockchain, tokenization, and DeFi. क्या दिखाई आपका ठीक है ना? You have to do this. No, we can ask them, please introduce yourself. By me, you can ask. Only me, you can talk.
I have it right now. Work.
Yeah, can we begin? Hello, very good evening to all of you. I am Dr. Deepankar Roy. I'm an associate professor with the National Institute of Bank Management, Pune. We are a Reserve Bank of India institute based out of Pune. So I work in the area of digital finance. This panel is about future finance with blockchain. And the key innovations that we are going to discuss is about tokenization, CBDCs, and decentralized finance. So I have with me, three of my co-panelists here. I'll request them to please introduce themselves before we begin this discussion. I request Mr. Devendra to first introduce himself.
Good evening, all. My name is Devendra Fadnis, and I'm working as a CTO of Zetix, which is primarily into corporate lending. So I have been a tech enthusiast, worked as technology guy since beginning, and I have been working on blockchain also for quite a few years. So this is a good opportunity for me to share some of the experiences.
Okay. Yeah, Vedant.
Hi, good evening, everyone. So I'm Vedant, and I come from a company called Vayana. So Vayana is basically a supply chain finance and a trade finance infrastructure provider. So we work with a lot of banks in India as well as overseas. We are also regulated by the RBI, as we got a NBFC license recently, as well as a trade finance marketplace license by IFSCA. So we are also based in GIFT City. So anything to do with trade finance, we are the ones. So I head the product at Vayana's emerging tech team. So we work on different projects related to blockchain, AI, and other emerging technologies. So yeah, I think that's it.
Yeah, over to you, Mr. Neeraj.
Hi everyone, I'm Neeraj Singh. I'm co-founder of Zolz. At Zolz, we basically work on CBDCs and real-world asset tokenization. And we try to see how can we empower financial institutions to build new innovative models which can basically open up finance and make it more accessible to a larger audience, which were earlier unserved.
Oh, great. So we have with us co-panelists with a diverse background. And so let me begin with this panel. So let me talk about what this panel is. Of course, the theme of this panel is about future finance with blockchain, where the focus is on tokenization, CBDCs, and DeFi. So as you all know, the global financial system today is undergoing one of its most transformative phases in history. At the heart of this change lies blockchain technology, which promises transparency, speed, and efficiency. So three key innovations, that is tokenizations, central bank digital currency, and decentralized finance. They are shaping the contours of what we call today the future of finance. Together, they hold the potential to redefine the way money, assets, and financial services operate. So let me initially define what these three terms are before we go into the panel and see some of the aspects around it. So tokenization, I think in the morning, I just heard Mr. Prasanna talking about it, also mentioning about it. But let me also define this particular term before we discuss more on it. So tokenization basically refers to the process of converting the physical or digital assets into blockchain-based tokens. So these tokens basically represent the ownership or the rights over assets such as real estate, stocks, bonds, art, or even intellectual property. The advantage of tokenization is, say I'm an investor, so I don't have much money to invest. I'm not a big time investor, but I really need to invest in some stocks or bond alternatives. So can I own a part or a fraction of that particular asset? So tokenization basically enables that. Besides, there are many other examples which I can cite. So maybe if I want to own a particular property, can I, instead of putting my entire money into that property, can I own or buy a fraction of that particular property? So these kind of things are possible using tokenization. The next is about central bank digital currency, which we call it as e-rupee in India. This particular CBDC has been promoted by Reserve Bank of India. So as we know, globally, there are many nations which are have implemented CBDC, like it's Nigeria. We have examples of Bahamas, the first country which has implemented CBDC. China is also done it. India has also done it. US has probably they have gone into a different line. They want to promote something called as stable coins. They're not into CBDC yet. Anyway, so what is CBDC? CBDC are sovereign digital currencies which are issued and regulated by central banks. Unlike cryptocurrencies, they carry the full trust of the government and are a legal tender, meaning we can actually use CBDC and make payments against purchase of goods and services in India, which we cannot do using crypto. We cannot buy goods and services and make payments through cryptocurrencies in India. There are other countries where this is possible, but not in India. But CBDC is a currency which is a legal tender, and it has been promoted by RBI currently. It's of course currently it's in a pilot program stage. It is not fully live. There are certain banks who have been allowed to kind of issue CBDC currencies. So that is the current status of that. And the next innovation around blockchain is DeFi, or decentralized finance, which is a blockchain-based ecosystem that provides financial services without traditional intermediaries such as banks. So this is very interesting. So we have heard of terms like peer-to-peer lending, right? So I can be a lender. I can be in any part of the world. So I can be an investor, but I want to lend to borrowers who can be there anywhere in the world, right? So there are no banks or intermediaries which are required, right, for me to lend. So these kind of financial services are possible using DeFi, and it relies on smart contracts to execute the agreements automatically. So these are the three innovations around blockchain which we are going to discuss today. So my first question to my co-panelist. So since CBDC is what in a big way we are kind of promoting in India, so let me start with that. Will central bank digital currencies replace cash or coexist with it? Devendra or Niraj?
So I think although the motive of the central bank is possibly ideal to replace it, if you go through the concept note that RBI issued when they launched CBDC, they said it's a digital cash, right? So digital cash implicitly means there is kind of a motive, and that's my interpretation. RBI's interpretation. But I believe they always coexist. As a country, I think cash is something that people like to touch and feel. There is a lot of trust, especially in the remote areas, and we are very far away from that going away. So I believe for the next decade, I think they will coexist. We'll see.
So, in my opinion, also it will coexist, but there are certain risks why the adoption hasn't been what RBI expected. So, like there are inherent risks for CBDC, and that's why many countries have shut down their projects. So, like US, South Korea also shut down their projects. So, what CBDCs actually bring about is they bring a risk to the existing banks. So, your current deposits are actually stored in the banks, and those are then used for lending, and that's how the banks run. If CBDC becomes mainstream, all the deposits go directly to the central or the RBI. That will bring a huge systemic risk on the banks, and that's not what RBI would want. That's why there are many different models they can explore, like a two-tiered model where the banks will be the one who will be actually taking in the deposits, but in the CBDC form, and in turn they'll be transacting with the central bank. So there are many different models which are going on, but coexistence with cash will exist for now. Let's see how CBDC world goes. Let's see.
I think what both of them have said, I kind of resonate with it, because the reason is that I mean, they both have talked from an aspect of technology or aspect of other things. I would like to talk it from the aspect of trust and the aspect of the dynamics of the economy that we have. So ours is a very diverse economy, and it still depends on multiple factors. So to bring every factor under the hood is going to be a journey, at least countries like India. So for example, we have seen UPI being picked up, but it had a very direct impact on the person who is a micro businessman till a mega businessman. But when it comes to digital currency, it needs to build a similar kind of trust, I believe. So if that happens well, then India is kind of a country which can pick up or take up any technological evolution pretty fast. I think Prasanna has given one slide where he has shown the new brands coming in, which have been widely accepted by Indian economies. So I believe it will coexist, but there would be a future to it, definitely.
Great.
I just wanted to add one more point. So for CBDCs, one more problem is that there is a notion in the general public about if CBDCs are digital currencies and they'll have a digital footprint, every transaction they make will be tracked by the government, and they just don't want so much intrusion by the government in their day-to-day life. So that's also stopping a little bit about the adoption, but there may be some ways where you can actually hide from the central government so that it can't be tracked, but it will take some time.
Yeah, I agree with all of you. Maybe CBDC have been launched, but somehow it has not seen very good traction. There are multiple factors, as you rightly said. Some of the people who are accepting CBDC, like merchants, so somehow they feel that all these transactions are getting recorded, unlike cash, where there is a kind of an anonymity there. That is one thing, but at the same time, RBI wants to push CBDC because one major factor is the cost of cash. So the printing cash, transporting it, security. In fact, we have done a study. So it's a huge. So somehow, if you can digitize cash, there's a huge saving for the economy. So these are, and of course, CBDCs, RBI has launched it as a competition to these cryptocurrencies. Somehow, RBI is not very comfortable with the crypto currencies because of its high volatile nature and no backing of any assets. So yeah, so CBDCs world over is growing. There are certain countries which have stopped their projects, but India and China, these are the countries which have taken a positive view of it. And we need to see how in the future how this CBDC growth, and we also look into it, what are the advantages. You talked about UPI. So whether is there anything which CBDCs can do, which UPI cannot? So because CBDCs are riding on blockchain. So in blockchain, we have something called as smart contracts, so programmable money. So now the main project that is being undertaken by RBI is to deliver government benefits through CBDC tokens, so that the intended recipient cannot misuse that money for some other purposes. These are some of the use cases which are picking up slowly. We need to still see whether how it grows in the long run. Okay, so from CBDCs, I'll change the focus to tokenization. So my next question is, how is tokenization reshaping the traditional finance and investment markets? Want to take it?
Okay. I think a lot is already talked about this. Ashish covered, a couple of models. Again, to reiterate the deep tier financing model that we developed with IBDIC. Basically, if you look at traditional supply chain finance, when a bank takes a credit call, it takes either on the buyer or on the seller, right? And if both of them are not credible, the bank is not going to fund them. But if they are part of a large supply chain and somehow you can bring the credibility of a top rated buyer down to these players, the bank can take a credit call, right? And that's where tokenization helps. Tokenization helps without exposing, right? So the ultimate buyer is not going to know where the tokens are flowing, right? But the trace that is recorded on the blockchain will ensure that the tokens are only flowing in the supply chain, which is ultimately feeding to the end buyer, right? That's traceability that can be maintained. Second, because this cannot be a closed loop economy, right? There will be multiple, it is not possible that the entire supply chain is banking with just one bank, right? There will be multiple banks which will be financing each and every tier. So how everyone can come on a common platform and trust that the coins that are issued by, let's say Tata Motors, as Ashish took the example is a genuine token. Unless you are on the network, you cannot validate that. Otherwise, you have to again trust a central party which will take all the onus, right? So if you introduce concepts of tokenization by breaking a large illiquid asset, which is a trusted point, break it down and make it accessible to people via capturing all the relationships, it opens up financing opportunities for them in and in a way which could not be done in traditional finance, right? So I think such models, such innovative models are possible, but you have to work with financial institutions to even think about these models. When we were introduced to this model, we didn't know anything about it, even finance to start with. But we spent a lot of time with bankers, with central banks, with Ashish himself, and we came to this. So it requires a lot of ideation. It's basically working on first principles approach. That this is what I have. These are the two different incompatible worlds I have. How do I bring them together and make something new? So I see a lot of opportunity, but everything has to be created. Yeah.
Okay. Okay.
So adding on to what Neeraj said, so what tokenization essentially does is it democratizes the whole ecosystem. So there are inherent lot of benefits in tokenization. Like if you have a token, so let's take an example of any illiquid asset like a real estate property. So there's a property in Dubai which I want to invest in, but obviously I don't have $1 million in my bank account to invest. So the token can be fractionalized. I can buy, let's say, $1,000 property or token value from in that property. Again, so what I did was, sitting in India, I invested in a Dubai property. So you could see cross-border inclusion. So a lot of benefits for cross-border payments or inclusivity in the whole ecosystem or the world. And all the data as well as the payment infrastructure, everything is on the same ledger. So the programmability kicks in. So you can actually program and keep the real estate tokens which you just bought as collateral and do something else with that. So a lot of different aspects also are enabled because of tokenization. And I believe, I think Prasanna also mentioned some time back that every asset will be tokenized. So I think that's where pilots are also happening. Many different asset classes are getting tokenized: real estate, gold, bonds, stocks. So I think just last month in US, Superstate has a platform where the first actual native issuance of an equity stock of a company called Galaxy happened. So and it is SEC approved. So in US, equity tokenization is gaining traction, and I think the rest of the world will be following it. So I think tokenization is the next big thing.
I'd like to add one point here, though. The biggest benefit that I see with tokenization is that it will bring a lot of speed, and it will also bring a lot of smoothness in the process. Because when you have a token generated by someone who's credible, then your further due diligence on the credibility can be definitely nullified, because you're using that token now, and that token is a very legitimate asset for you. It suddenly becomes that. So I believe having tokenization approach considered for the future of finance, at least, is going to be a next big thing. And when let's say I talk from the lending perspective, the loan process in itself is very cryptic when it talks about corporate lending. So it's a big value loan, high value loans. So there, the due diligence processes or the underwriting processes are quite cryptic, even if the type of the loan is same, but the nature of the due diligence is very different. So in that case, if there are standardized tokens available, I think for banks to take it further and go ahead is going to be much more smoother. I won't say easier, but smoother. So I believe it is going to be the next thing, which definitely will make an impact.
Yeah, I just wanted to ask you, you talked about real estate tokenization, and sitting in India, I can invest or buy a fraction of a property and I hold ownership of that property in the form of a token. So now let's say that property is, let's say a mall, a big mall, and it has various shops. So are you trying to say that I am holding an ownership of one shop? I don't understand. So fractions, or let's say the owner of that property wants to sell it, and there are 100 owners of that property. So how does it happen? Suppose I want to sell my stake. So whether I have to go to an exchange and sell my stake, how the transactions are happening there? Can you just elaborate?
Yeah. So typically what happens is that, let's say it was a mall, for example. So the mall ownership is then transferred to a SPV, and that SPV's rights or ownership is then tokenized or fractionalized. So essentially you are buying your share in that SPV, and the ownership of that SPV is of the mall. So in order to liquidate everything, you'll have to pay off all the owners of the SPV tokens. So that's how the liquidation process will happen. But using that SPV, so all the earnings from mall rentals or any other kinds of income from that mall will automatically be given to the SPV and then directly transferred to the beneficial owners who are the token holders. So
Okay.
that's how the models
Yeah,
are
yeah.
working right now.
Right. So I know of one use case of this tokenization in India. It's about warehouse financing. I hope people know about warehouse receipt finance. So if I'm a farmer, right, if I grow some crops, okay, so if I'm want to sell those crops today, I don't get the correct price, so I have to wait for another 6 months to get a good price. In the interim period, can I stock these produces of mine in a warehouse, in a cold storage? So one of the company has actually implemented that warehouse receipt financing. So what I do is I let's say 100 quintals of rice, I kind of keep it in that go down or warehouse, and the warehouse owner issues me a kind of a token or a receipt, which is kind of a tokenized on blockchain. So against that token or receipt, I can go to a bank and draw a loan. And draw a loan, right? So these are the kinds of use cases which we are actually seeing in India. So farmers are getting benefited to a very great extent. So there are many other use cases around tokenization which is coming up in the Indian space also. So yeah, so now let me go to my last question. I hope we have time. So the last question is basically on decentralized finance. So as I said, decentralized finance is the future of finance. Maybe centralized finance is what we are having today, where we have banks like intermediaries coming out with products like savings, investment products, or loans. But of course, we require an intermediary, a trusted intermediary. But now we are trying to bypass that trusted intermediary, and we talk of peer-to-peer lending, right? I, as an investor, I lend to someone else. There is no bank or intermediary in between. So these kind of products, financial products, finally would be kind of sold or bought, right? And this entire area is called as decentralized finance. So my next question is, how can decentralized finance complement or disrupt banking service?
In my view, these are two different school of thoughts, right? One says that investor protection, right, and a regulator is required. We have a traditional financial system. The other says that you don't need a regulator. Everything should be open, like an internet. It's DeFi, but no, investor protection. It's up to the user to decide, which school of thought he belongs to. But in my view, I think going forward, these two will be merged, right? Because a lot of liquidity is lying in the DeFi world, which can be used in the traditional financial ecosystem. The asset tokenization that we are talking about, I think, again, if it's a native asset, native blockchain asset, you can issue it, and if you're a private issuer, you can just issue it on a public blockchain. But when you are a financial institution, I think it makes more sense if it's an asset to issue it on your own, sort of an enterprise ecosystem, because you don't want that information to go out in public, because there can be trade, secrets which you don't want to, no matter how much, unless GK becomes a really prevalent thing, which, which is still a little further in the future. No matter how much pseudonymity you put in a public blockchain, people will figure out, trace you out on your, addresses. So no enterprise today wants to put, their trade secrets on a public blockchain. So your assets are going to lie on, your private ledgers. You can bridge liquidity from, USDT, USDC from Ethereum, Solana networks, and you can create a hybrid sort of structure going forward. I think something like this, JP Morgan has already started doing, and technology exists, to kind of settle two different assets on two different chains, atomically. So I see both these merging, but again, the assets will somehow remain private in my view.
I believe the main adoption will come only in the regulated space, but for regulations to come in, so there has to be many different kinds of pilots and experimentation which needs to be done in the blockchain world. So what blockchain or DeFi, tokenization, all these things bring in is automation, and that's where you can actually remove the intermediaries which are there. So in a typical bond issuance, I would say there are so many intermediaries. You have rating agencies, you have depositories, clearing houses, RTAs, trustees. I don't know if I've missed any. So many intermediaries. Every intermediary also comes with a specific cost. So, and though many of those functions are just manual functions of data entry or verification, and all of these things can be automated. So I think where DeFi will be heading is to cut down on these intermediaries by automation of a lot of these tasks. So I think in the regulated space with automation, that's where eventually DeFi will head to for mass adoption.
I think along with these two, I would just like to put another aspect to it, because now I'll speak a bit about my domain, because I work on corporate lending space, and when it works in corporate lending, we have so many use cases in there, and a lot of use cases finally boil down to two major factors. One is you can call it a final product that a borrower is giving to the lender, which lender has to scrutinize. And second is the time that is required to do that scrutiny. And a lot of it, if you have seen in that scrutiny, a lot of repetition happens. Why that repetition happens is, in spite of banks having the information, they probably have it in silos, or they probably have it in a traditional ways where it is difficult for a person on the ground to access it very easily. So now in this case, lenders and borrowers both are in question. So if there is a decentralized platform, but which is available, and there is a direct access given by a borrower to the lender in some ways and shape, then the whole idea of spending time doing due diligence again and again, making sure that all that paperwork is again printed and again those stuff is done, that can actually be reduced to a larger extent. And when we do that, it will actually bring in a lot of speed in giving the loans to the people. There are banks who want to give the loan, there are borrowers who want to take the loan, but there is such a huge amount of time that is spent in these two. So with this kind of decentralization and the information directly available, as you mentioned about reducing the intermediaries, I don't think it would be completely zero. It would take a lot of time, but there would be an automated way in terms of intermediaries just having to give an access to the system, which means that a lot of allied systems can utilize them and move on. So that will bring in a lot of speed. And if that brings in a lot of speed, and the trust of the blockchain as a technology that gives in, because there's a fundamental difference between other technologies and blockchain. Other technologies mold by business. Blockchain, you need to mold your business by what blockchain does. So that brings itself a lot of standardization into the process. So whoever gives a token, let's say, whoever gives you access, it is always in a standard format. So that is always trustworthy. and beneficial for the consumer to use it further and for a specific period of time. So that control is always available to the person who's being a source of truth there. So I feel, yes, decentralized finance can really be benefited by different methods of blockchain implementations that are happening currently. Some are on the payment side, some are on due diligence side, some are on smart contract side. But all in all, I believe if this picks up well, then it would bring in a lot of smoothness, a lot of trust into the whole system.
Okay, so my take basically the future is towards having centralized finance, of course, is there, but let us also have decentralized finance. Both come together. These sort of mixed models might emerge in the long run, where regulated banks they offer DeFi-inspired products with trust and compliance guarantees. So maybe we'll see such kind of a finance in the long run. So now let me open up this floor for questions. Yeah. Pass on the mic to them.
Hello. Yeah, we have folks from trade finance and CBDCs we spoke about. So bringing back to the topic of CBDCs, I would like to get your views on how the cross-border payments, can get better with the help of CBDCs. Can that work in a faster pace than the regular retail CBDC adoption? Because we know the challenges of SWIFT, right? And everybody knows it. And there are certain set of challenges. So we definitely want to have a better system than what SWIFT is offering. So can the cross-border payment or the wholesale part of CBDCs can accelerate better than the retail part, given all the problems that you guys highlighted? What is your take on it?
Yeah, anyone?
So I think CBDCs integrating with, so every country will have to integrate with each other for exchanges. And I think that will take a very long time. Instead, right now, there's a rise of stable coins in the market. So different stable coins are coming in. There are automated marketplaces which are getting set up on the blockchain layer. So you just give USDC as a stable coin and get, let's say, a yen backed stable coin or a AED backed stable coin. So there are exchanges which are getting set up, and you can easily just make cross-border payments by using those exchanges. So for a CBDC, cross-country or cross-border exchanges will take time, because for that, every country will firstly need to have a CBDC layer themselves, and then they'll have to bridge like a new centralized exchange like a SWIFT or something will have to come into existence, and only then can happen.
I think, I'm not sure whether, but there was something called as Ripple. I don't know. Most of you must be knowing RippleNet, right? So RippleNet absolutely tried to do the same thing, but with blockchain and cryptocurrency. So what was its purpose? Its purpose was to reduce this whole time that is taken between the cross-border payments. So for example, if let's say India and US has a double tax treaty, but India and Europe, some of the Europe countries have double tax treaty, but those ones who don't have, there the whole transaction was taking time because of a lot of intermediaries taking their own sweet time to do the stuff. But now if you're talking about digital currencies, this whole intermediary framework actually becomes automated. And it's kind of, for example, in RippleNet, if you have intermediary, that will actually push their prices on the stock, and by algorithm, whichever is the best price, you will get that converted and you'll get your money within 7 or 8 seconds probably. So if certain things, and as you rightly mentioned, all of them get connected, we would have a very seamless experience of having the same day transactions cross-border wise happening in a very secured manner. So that is definitely possible if of course, if the entire chain comes together.
Thank you. I think we are already run out of time. I'm sorry. We can take the questions offline maybe. So I thank all my panelists for enlightening those discussions. Yeah.
We'd, we'd like to invite Mr. Nikhil now to present the mementos to our speakers.
So I would like to.
Hello. Hello, am I audible? Yeah, this is working.
Yeah. Hello, everyone. I would like to call Sonali ma'am and please introduce yourself about your good work, whatever you're doing, and try to very short. I request due to time limitation.
Yes, sure. So good evening all. I'm Dr. Sonali Patil, working as a professor at Pimpri Chinchwad College of Engineering, Pune. And there we have started this blockchain club, and since 2014 we have been working with blockchain domain. And I'm also chairing IEEE Pune blockchain group and also coordinator for region 10 level blockchain groups. And today actually two panel topics are combined, but mostly one of the topic which we may be highlighting is role of academia in blockchain adoption. So
And
thank you
digital
all.
governance in blockchain for academic.
Yeah, and governance blockchain for academics. So it's a privilege to be a part of this panel. Thank you.
Dr. Pramod, please introduce yourself.
Hi, I'm Professor Pramod Patil. I'm associated with Dr. D.Y. Patil Institute of Technology, Pune, as a professor and Dean Research and Development. Also, I'm associated with Savitribai Phule Pune University as a Dean for Faculty of Science and Technology. If you ask me, the role of professor in any institute is, yes, of course, first is teaching and learning, right? And then research, and yes, of course, we look for some innovation to be done in the area where we can contribute. So my area of interest are data science, machine learning, databases, and yes, of course, some of my students who are working under me as a project members, and they're working on different projects which are in different technologies like AI, ML, or data science, or some of them are in blockchain, or some of them are in some interdisciplinary based. And Yes, blockchain is one of the upcoming area, and we are looking some good opportunities for our students in that. And we are also looking for some innovation and research to be done in this technology, and we are working towards it. At Dean Science and Technology, I'm handling different faculty of engineering, faculty of science, faculty of architecture, and pharmacy. So these four faculty are under one faculty of science and technology at university. So it is complete multidisciplinary, interdisciplinary, and transdisciplinary aspect. And we are taking a lot of initiative towards the skill-based education for our students. I think this initiative also is going to support to that, like how we can upskill our students for some specialized technology across all the faculty, even though it is multiples. So thank you very much for giving me an opportunity.
Thank you, sir. Shraddha ma'am, please introduce yourself.
Good evening, everybody. This is Dr. Shraddha Phansalkar. I've come from MIT ADT University, working there as Associate Dean in Academics. So being in academic region, we have been promoting BTech, Computer Science Engineering, specialized in blockchain. And I'm very happy to say that our first batch has graduated this year. So this is a core blockchain technology BTech program that is designed for creating a task force. This afternoon we have heard lots of use cases, and I know there are lots of ways where the university will be able to collaborate and exchange with the industry persona. We do have a Center of Excellence in Blockchain at MIT ADT University, which also caters to some of the consultancy projects that come from different domains. We assist in POC development, and we do have some very niche areas of research in blockchain technology. Per se, security is one of the area that we look for. So very happy to be the part of this panel. Thank you.
Thank you, ma'am. Ankita, please introduce yourself in a short
Yes.
note.
Hello, everyone. Good evening. I am Ankita Patidar. I'm a tech lead at Ironworks and a co-chair at LFDT India chapter. I have like 9 years of experience in blockchain, and we are extensively working in decentralized identity past 6 years. So I'm a contributor to a lot of LFDT and Open Wallet Foundation projects. And I'm a maintainer of one of the projects we have seen in a presentation as well, which is which is contributed from India under LFDT, which is Credible. So I'm a core maintainer and contributor to that as well. So that's about very
Thank you,
short
Ankita.
about myself. Thank you.
Ishita ma'am, please introduce yourself in a short note.
Good evening, everybody. My name is Ishita Sharma. I am a corporate lawyer specializing in the area of Web3, crypto, and blockchain, and also the managing partner at Fathom Legal Advocates and Corporate Consultants, which is a law firm that deals with, again, these three domains specifically. Studied intellectual property rights from Harvard University, and I'm here helping the ecosystem navigate the bridge between the law and the innovation in tech. That's all I do.
Thank you, Ishita ma'am. So my first question to you is, what role do you see blockchain playing in enhancing transparency within governance?
Enhancing transparency. Awesome. Okay, so as we all understand, the role of a blockchain infrastructure is, or the key backbone around it is trust, transparency, and it's a live auditable structure. So if, and the government, as we are seeing right now, that the adoptability has increased by leaps and bounds, and I was sitting with Mr. Alok Gupta, and he was telling me the kind of projects that they're running. The idea that, we can run POCs like e-voting, and the kind of impact that it would create on the system is huge. Imagine votes being conducted on a blockchain ecosystem, or you say schemes like Manrega, the money being distributed by a blockchain ecosystem, you avoid duplication, you put a curb on corruption, right? And you, in fact, the entire governance model gets a lot of trust from the Indian public. So blockchain as an infrastructure is time and again getting confused by crypto. The government does not understand the difference somehow. And we always get mingled by, this is crypto and it can get hurt, and can face hurdles. So that is something that I feel our academicians sitting here would put in a lot of effort to educate the overall ecosystem, not just the industry players, but people sitting at the top level to make sure they understand the relevance of what this technology brings to them.
Thank you, ma'am, for your input. So my next question with Ankita, what design principles should blockchain platform adopt to scale effectively while safeguarding privacy and data?
I think
design principles.
Yes.
Okay.
Yes. So one thing that you said is privacy. So
Okay.
data protection and how much to put on ledger. I mean, we are talking about blockchain, so we talk about digital identities as well.
Yes,
So
yes.
identity getting tagged into blockchain, tagged on blockchain, right? That is so what we are putting on data. Then we had one more thing called scalability. So scalability, we should keep in mind about the scalability. So that is somehow related to what we are writing to blockchain, how we are using blockchain. So why, first of all, we need to understand why we use blockchain, then how we should use blockchain and what should go on blockchain. That is,
yes.
and whenever an ecosystem which is created with blockchain, so it should comply to the rules and regulations that we have. So if I talk about, then DPDP is coming in India, right? Then we have GDPR, then we have HIPAA. So there are n number of use cases of blockchain, from digital identity to healthcare to academics, everything. But while designing a system, we should consider the regulations as well and the scalability part of it. And of course, it provides transparency and immutability. So what data you are writing to blockchain is very like crucial, because once on ledger, always on ledger. We
Yes,
know
yes.
it's like developer, everyone know this.
Yes, yes. One more question for you, role of open source framework and ecosystem collaboration in blockchain adoption for digital public goods. What is the role of open source, you feel? Because your product is credible as an open source, so you should tell us more about why you use open source and what is the role of that.
One feature of blockchain is transparency, right? And open source also brings transparency because it's an open governance.
Yes, yes.
So it has open governance, open collaboration. So it brings more trust and transparency to everyone who is using it. Then you don't have vendor lock-in. Of course, you can get support, maintenance from core maintainers which are building the open source projects, but you don't have vendor lock-in while building big projects. I mean, in the initial keynote, like people were mentioning that when we develop big projects, it takes time to build those, because we need to pick and choose about what we are using, what stack we are using, where it is going to be, how it is impacting. So if n number of people are maintaining it and if n number of people are using it, so it brings a trust and brings a transparency in the system, which are open source. So huge community collaboration, and we can anytime like contribute. The people who are using it can contribute to it as well. So it brings open source. That's why open source is like transparent. And
that is a wonderful answer. So one more question for Ishita madam. So how can government utilize blockchain to ensure accountability to reduce the corruption? That is a big topic, and you're a lawyer, you can answer better.
I'll straight away come to use cases. Let's not talk about theory, let's talk practical.
Yes, use cases.
Yeah, that's what everybody understands and loves in this ecosystem. Okay, so now we're talking about land registries on blockchain. Wonderful use case. What all does it avoid? Number one, it avoids land grabbing. Most of the civil, disputes in the civil courts, which go on for generations, right? If my grandfather had a dispute, I'm sure at least 20% of you must be facing this, right? For sure, I'm not going to get it. Maybe my generation might get a part of it. So to avoid that huge gap, if all the registries are done on an immutable ledger, which once recorded is recorded, and if it gets tempered, everybody gets to know about it, so much of your hassle is sorted. Number one, land grabbing reduces. Number two, property rates increase, right? The overall market gets a huge impact, and boom. So that is one use case. Second is, of course, e-voting. The moment voting comes on blockchain. So I'm working with the layer 1 blockchain based out of Pune. It's called MST blockchain, and e-voting is one such project that we are trying to push through Karnataka government first. And once that happens, all the vote chori scams will go away, right? So blockchain is a beautiful, very well curated system which can help government the most, provided we receive a little less resistance. And to say honestly, I don't think government has much resistance as much as the banks have. They are at the hindsight trying to push us behind, if others might agree with me. Third use case, of course, like I mentioned earlier, a lot of government welfare schemes are getting misused. One person is duplicating themselves, they're going and availing the government schemes again and again, and the rightful users barely get any benefit out of it. A major chunk of that scheme is gone away in the trail. So that can also be stopped once you know that, A. Suresh from Pune has already availed this part of the scheme and therefore is not eligible for the other one. So yeah, blockchain plays a beautiful role. It plays, if it is run in sync, the government can benefit a lot, but I don't know how much more time it will take for government to understand and execute it at the larger level.
Thank you, ma'am. So my next question to Shraddha ma'am, what approaches has your university taken so far to introduce blockchain education and research to be implemented as part of your curriculum?
So as I said, blockchain adoption was always a challenge in academia. With the trends of AI coming there, blockchain technology was finding its place very smaller there. But at the same time, the disruptions that started coming on the finance field, I think blockchain started coming in the limelight, even in the academia world. So this was the time where we took a little revolutionary step, introducing a BTech program in blockchain, which is one of the very niche curated program that is made in this university. Along with that, the program not only talks about the courses. I was very happy to hear Augustine sir's topic where, he started from the very fundamental of blockchain and took us to the, the security and the scalability part, the layer 2 solutions that are, talked about. So this is the journey that we traced through the BTech blockchain program. But apart from that, we focus more on the internships and the research projects or the industry projects where the students get to work on. Just to give an example, in paucity of time, I'll be briefing about. Our students got an opportunity to work with one of the leading pharma companies in Pune, and we tried to develop a POC which helped them visualize that how QR code based tracking system of a consignment of vaccines could then reach to their customer in Ghana, and the customer is assured of its entire compliance that is made during the transportation process. So we just developed a POC, we deployed it, and they were very happy. Probably they're taking it to the commercial level. Academicians hardly find their place in commercial products, but I think we play a vital role in convincing the industries of the probable use of blockchain. The second example is the Department of Land Revenue Registry, which Ishita ma'am just spoke about. That's the biggest use case. And Pune's Land Registry Development Department, Land Registry Department developed a POC with us. And probably that is going with the NIC for the commercial deployment now. So we're very happy that our students got those exposures.
That is a great work, ma'am, you're doing right now. One more question for you, ma'am. You have established a center of excellence in your university. So are you planning to offer some PhD, or what kind of stuff you're doing in terms of postgrad courses and PhD level at university?
Yes. So the Center of Excellence, as I said, works more on the training consultancy, because the biggest hurdle that I face, or biggest challenge that I think academicians should take in blockchain adoption, is perhaps sensitizing the students or creating a task force that is ready to take up the industry level problems. So we work more on the training consultancies right now. We have been training partners, knowledge partners to some of the industries who are trying their hand in blockchain adoption. Secondly, as I said, some of the very niche POC level projects that we do, and we do have our PhD scholars who are working in curated area of blockchain. To name a few, we are working in the smart contract vulnerability detection. We are also now working with one of a sponsored project with Curtin University, Australia, and that's in the net zero construction management. So these are some of the areas where the research is right now working. We are working on that.
Thank you, ma'am. It's a great work you are doing right now in terms of academic. And my next question to Pramod sir. Pramod sir, should blockchain be offered as an undergraduate course or postgraduate course? What is your take on that? In which section we have to offer it to students?
Blockchain technology, it's a technology basically, right? So that can be used at different levels, or it can be a part of the multiple applications, as many of the experts they have mentioned it. So if you talk about the academia, now the government of India and government of Maharashtra, they have taken a good step towards transforming this education system. And we have started the implementation of this new National Education Policy 2020. And under that new education policy, if you go and see some of the verticals like vocational skill enhancement courses, or skill enhancement courses, or internship, on the job training, or project based learning, right? So if you look at these verticals, then we feel that yes, of course, we have to identify such type of technologies like blockchain technology, and we have to introduce it as a course. It can be a part of the skill, it can be part of the core, or it can be part of the elective courses, right? Even though we have an open elective, that is like totally interdisciplinary course that we introduce, but yes, blockchain can be a part of it, right? So at UG level, we are looking for these kind of verticals in which we can fit blockchain technology at UG level. For PG level, yes, of course, we need to see that how the advances in blockchain technologies can be part of the PG program, especially those who are looking for some specialization, or they are looking for some problems to be identified and problems to be solved by using this technology. So for that also, we can introduce some of the courses at UG level. And yes, of course, as Shraddha Madam has rightly mentioned, that for PhD, yes, we can recommend the blockchain technology to be introduced as a part of the coursework, because in coursework, we give flexibility to the scholar. They have to undertake some of the courses related to the work they want to carry out throughout their research journey. So yes, we also recommend this blockchain technology as a part of the PhD program as well.
Okay.
And yes, students will get the benefit of it. And for that, industry now, their role is very crucial, and they have to come forward and see that how we can establish more center of excellence, more the setup by which the maximum students can get benefited, and that will directly impact on the society.
Okay.
Yeah.
One more question for you, sir. So should academic aims to groom blockchain entrepreneurs or only just future employees? What is your take on that?
Yes, many of our institutions, when we execute the admission process, and before admission process, we used to interact with the students from different areas. And while interaction, we understand from the students like where they want to go. Okay, and maximum students, they incline towards how they can get the maximum job opportunities during the 4 years of engineering course, or during the 3 years BSc course. That is one aspect. But second aspect is more important, that we have to groom them as an innovator. Okay, they have to identify the some of the good innovative ideas in emerging areas like blockchain, and for that we need to have some center of excellence, as he has rightly mentioned. And then definitely we can see some innovations to be done by the students under the guidance of the mentors from academia and the industry together.
Thank you, sir. So my next question to Sonali ma'am. With blockchain evolving so rapidly, how can universities ensure students remain industry ready for the job and for being an entrepreneur?
Yeah. So I'm the part of the institute which is like affiliated to Savitribai Phule Pune University, SPPU. And we are fortunate to have Pramod Patil sir. He's a dean for SPPU. So more than 100 colleges are affiliated with SPPU. And being Dean Science and Technology, I can just put the point here on this platform that yes, for those programs, certainly SPPU can help when for the affiliated colleges. Being an autonomous college, yes, certainly we try to have those programs there, but the outcomes will be more visible if like even universities and industries are coming forward to support those.
Okay. My one more question, any of you can from academic can answer it. So like, how important are hackathon, dedicated labs, industry projects, COEs are for academic to provide to students of becoming entrepreneur or maybe job ready? That is a big problem of industry. We are lacking the skilled labor.
So this is actually colleges like which are affiliated to universities or for the big universities also. These are the platforms where the students can get the opportunity to showcase their work, and then they can get the hand holding by the respective people who are actually working with that. Also, like, because we found we have few examples where because of this hackathon platforms, like today I'm very happy that Citibank is having that hackathon, and the teams which are shortlisted in the finale, 5 teams. So from Pune also, Cummins College, there are 2 teams in the finale. So that way they are getting opportunity, and maybe they will get hand holding to like deploy that their idea, means idea to product, that conversion can help. Even as I am part of IEEE Pune blockchain, so I'm aware that such kind of platforms, when they offer anyone from any college or any university, any institute, they get the proper mentoring and the opportunity. And even not only nationally, but internationally, blockchain based lot of good hackathons with lot of good incentives. And even like IIT Madras having their workshops with Hedera and all. So even not only this hackathons hosted by industry, but even the institutes like IITs, who are pioneers for most of the advanced technologies, there our students get the opportunities.
Thank you, ma'am. Thank you for answering all the questions so wonderfully. Thank you, sir. Thank you, ma'am. Thank you, Ankita. Thank you, Ishta, ma'am. It was a great panel discussion. We have discussed about digital governance and academia role in blockchain. Thank you all. Wait, Shraddha, ma'am, please wait.
Now we have to cross the entire city.
Good one.
We are other end. Very difficult.
Good one.
Yeah. Hope we will get all these pics before leaving.
Thank you all. Just hold on for a moment. May I now request Namita to hand over Memento as a token of appreciation. Um,